Hello, good morning, everybody. Welcome back to the stream. Ooh, yeah, I hope this thing pulls down first. Can we see it pull down? Or is it gonna break? Wow, this is crazy. It's literally the 1 minute candle here that's opening the London open. Look at this, it's breaking right before London opens. So, you know, for me, this is kind of a risky trade because it's good with volume because you got London open, but at the same time, we have that hourly candlestick that's about to open over here. You know, it's a pretty major session that's about to open. So I don't want to take in any kind of like a drawdown here. But it's such a good move. It's such a good move, man. I've noticed, if you guys have been paying attention this week, Monday, Tuesday, London open dubs. Monday, Tuesday, straight London open dubs. Beautiful week. There's a freaking Thursday over here, getting a similar situation happening. But now the difference is this is breaking before the London open. You see, now we just got the London open. So I'm trying to avoid like any sort of pullbacks. But I think like price has a pretty good chance to continue moving up bullish, mainly due to this government shutdown thing being lifted. That means we're going to get more jobs data in. And with the jobs data, we might even see all-time highs. Look at this. Crazy. I feel like once the US government opened up over here. Oh, let me read the chat. Yeah, once the US government opened up over here, it's going to give you a good catalyst for buys. Really wish you could take these moves, especially at 0.60%. Oh, man. Wow, why did London have to open like literally right here? Kind of threw me off my trade. But I think, you know, confluences are there. So yeah, we could have had a really nice Monday, Tuesday. It feels good to be back, guys. Just, you know, sorting some business out and then gonna be more consistent, but I think we should be good now. I think we should be good now. Hey, what's up, Kraken? What's up, Doctor? Got Architect back in here. Oh, yo, Architect. I think what happened was because there was some kind of like post. I think your account might have posted some things, like some of those images, those spam things. I'm not exactly sure. But there's a chance it was either that or just a mistake. We'll just keep monitoring it. Maybe somebody hacked your account. Oh, look at this. It's already up over here. It's already up here like 30 pips. Damn. What are we gonna do now? Anybody take it? What are we gonna do now? Hey, good morning. Holy shit. The Thor hammer tastes like pennies. Good morning. Took 2 trades and messed up the lot size on the second one. I need to take one more. I mean, put one lot size, put 0.10 because it was trading futures. Yeah, it's clean, higher time frame range. I'm worried about London Open. London Open freaking shake this out. Like, how insane is that? Like, literally, the one candle. This is the one candle that didn't need to break out of the whole freaking day. Imagine this. Out of the whole day, it just had to come, give me my setup right here at the London Open with that just 1 minute candle. It is insane. Out of like a whole 24 hours. But anyway, you know, these are pretty high probability areas. And if you look back at the week, it was so good. I don't even want to trade anymore after missing this. I just feel jaded there. Don't want to take a trade anymore. But anyway, if you look at this week over here, let's go on Monday. Where is it? Here? Tuesday. Where's Monday? Monday, a small little breaky over here. About like 40 pips. Price came down. This was during the simulation. We were talking about this move during the simulation. Then there was this other one here. There's another re-entry we spoke about here. That one pushed up about like 58 pips. That was like the London Open. Man, look at the size of that 5-minute right now. Freaking flying. That was this one right here. Monday Open. Liquidity grab, fake out below the lows. This is Tuesday. Boom, boom, boom. Nice little 46 right over there. That was nice to see. The timing was a bit better on that too. What happened on Wednesday? I don't think we saw anything Wednesday. Boom, boom, boom. I didn't even look at the chart on Wednesday. Now we're just back here on Thursday and I saw the same thing. I was like, man, this will be a good trade. But just got a small little variable there. Kind of messed me up. But you know, it's moving up mainly because of the fundamentals here. It's moving up because of the government shutdown's been lifted now. You know, so we're going to be getting jobs data. Gold extends rise as Trump signs deal to lift shutdown. Gold is extending its winning streak driven by a weaker dollar. Expectations of Federal Reserve rate cuts and persistent central bank accumulation. While near-term consolidation is possible after rapid gains, the broader outlook remains constructive. There's a scope for highs above 4,300. What is it? Goldman Sachs saying 5K by the end of 2026. But I think we could get to 5K already like pretty fast though. That's easy for gold. Easy. Easy. By year end, provided real yield stays subdued and monetary policy remains accommodative. Trump on Wednesday signed a legislation ending the longest government shutdown in US history. The shutdown, which began on October 1st, had halted the release of critical economic data. I think we missed like NFP for like what, two months? So how long was it? Including payroll and inflation reports. Economists said US Labor Department statistical agency should prioritize the production of November employment and inflation reports. The Fed will again lower its key interest rate by 25 basis points next month to underpin a weakening labor market, according to 80% of economists polled by Reuters, up slightly from a poll taken last month. Oh man, this is like increasing here for a rate cut again in December now. You see how things change in the market? Like from one moment, no rate cut. Next moment, rate cut. Happens so fast. It happens on technicals. It happens on the fundamentals. Like literally every single second in the market is unique. Non-yielding gold tends to do well in low interest rate environment and during economic uncertainties. Yeah, we gotta go and see what the beautiful little TFX entry right here, boys. See a sell below that candle, hit $500 on prop firm today. Nice one, nice one. Oh, you could have like waited. That's how you're taking. Yeah, true. Close above and then break above. I'm taking out like this breakout SL reduce SL so much. This was the biggest one, 11 pips. The other trades 5.8, 8 pips. Nice, nice. Yeah, it's been such a nice week, man. The week I'm not streaming, it's such a beautiful week. Hey, what's up, Xauusd? Bombar is ready for take off with green candles. Bomba! Yeah, price should be going up here. Yesterday, NY Open was so amazing. Exactly the same. I really like this one because of the liquidity grab below here. On the 5-minute, I saw that little liquidity grab here. I was like, nice. Got some resistance up over here. Take out these lows, break the highs. Continue to move upwards. Usually it doesn't really matter too much if the candle doesn't have the top wick. But it would be nice to have it. But, you know, since it's the volume coming in, London, it's okay. It doesn't really need it. Damn, look at this thing go. Freaking bomba clot here. Was it a zero drawdown entry? Yeah, was it zero drawdown entry here too? Man. Zero drawdown, straight up profits. Sniper exit today, shotgun play in the morning. Nice. Yeah, exactly. Those are counter trend moves. Yes, in this simulation, I just want to bottom wick to place SL. Then once it breaks, boom. Damn, look at that 4 hour here. Yeah, some smooth sailing. Let's see, when did this on my Monday? We broke above resistance on the 4 hour. Remember, this is that resistance we were talking about before? So that one got filled quite nicely. I think we broke it on the... I think this was like a Friday. Oh, this is a Monday open. Yeah, this is a Monday open. Candlestick broke above resistance, closed above. You see, because this is like the sort of inception over here. So you see what's happening right now is currently what happened here on the 4 hour time frame, correct? Because markets are fractal. So you could see it like the same thing. Basically, it just happened right now. Now you also got that clean range, which price has to just keep moving up on the 4 hour to the all-time highs. But man, this was like the smoking gun over here. I'm not sure if there was any fundamentals which lined up with that break. But yeah, that was a smoking gun. This is like the main point A on the HDF for price to continue moving up. Had a small little break here again, little accumulation, and then continue pushing up from the zone there too. Filled up the range. It was around 658 pips. Beautiful. Created as our foundation. Remember, we like trading with foundation, the structure. We got like nice little structure right here. Boom, boom, boom. Broke above, entry confirmation, zero drawdown. Broke above, entry confirmation, zero drawdown. Broke above, entry confirmation, zero drawdown. But that's like on the 1 minute here. Now you're gonna see that one a little bit better. A little bit more confluence too. That's why it's like, man, I'm a little bummed, man. Like this move, I wish it just came a little bit later. Because I really like these London Open ones, you know? Like, these are the much more fresher type ones, because now it's like price has already had one move. And typically, we know London at some point starts to consolidate. So it's going to have a higher chance of doing this now up here. So it's nice to get that London push, and then afterwards consolidates towards like pre-London, pre-New York Open. It's going to start consolidating soon, I reckon. That's what we kind of anticipate from the London. Usually, like at some point, it'll give you a nice push for open and then consolidate to pre-NY open. Maybe retest support, then skyrocket again. Retest support. It's in like some serious momentum though. Portfolios limits just got bigger. What is this? We've raised limits on our portfolio tools. The Leap Challenge returns. Anybody join this? Co-marketed by TradeStation. Born to trade. Born to trade. It's like, I think I saw an advertisement like that once. About traders. Something like, born to trade. Close the breakout on 25 and 28. Nice, nice. Maybe retest support, and then yeah, we already saw this sniper exit. Man, my brain moves too fast, so when the chat is moving slow, I'm just like reading the comments again. Comics gold futures, bullish momentum growing stronger. Chart shows market talk. The futures breakout above resistance at 4,200 overnight was also weakened. The bearish engulfing pattern that formed on October 21st. Bearish engulfing. The price, man, one thing I learned about these candlestick patterns, they're just like, they just don't work. You know, it's nice to know what like a bearish engulfing candle is, but you know, it just doesn't work. It doesn't work. I used to do that so much. Is like I would wait for maybe a candlestick to come into a Fibonacci, golden zone, and in the golden zone I'd wait for a engulfing candlestick. So if you gotta have like a bullish candle, and then before that maybe you had like a bearish candle like this, then it engulfs, and then you take it on the break of the highs to continue moving up bullish. That's what I used to do. But you know, I think like over the years you're gonna realize that market somehow it just moves, right? It just moves. It's not necessarily all this to do with like candlestick patterns, but of course it's like candle patterns will help you get your position. For example, this could be considered like a candlestick pattern right here, but not in the sense of like necessarily 3 white soldiers, Maribatsu, a morning star, evening star. What other candle patterns are there? Doji. Is that one with a crow? Something crow. Oh, dead man hanging? Dead man hang? Or is dead man hang? Yeah, I think dead man hang. I remember something with a crow. The video I used to watch. Live stream back. I thought you said next week. Yeah, I was trying to like finish my work so I could stream this week. But look at this, man. This is just so amazing here, and it's still distributed. It's not giving any pullbacks. It's still just distributing, man. It's like it's because of the macros. That's what's currently driving this up like this. So sometimes you wait for that. Oh my days, look at this thing go. Already up like 58 pips on this one candle on the 1 minute. Overall from entries up like 141 pips. TFX concepts, I don't know if anybody took it, but you know, option was there. That's the only thing that differentiates traders, is their perspective on risk, on how risky that they're gonna view a setup. That's gonna be like always individual. Because out of a whole day, everybody gonna get like so many setups, right? But the chances that you all take the same setup, I think is gonna be very low. You took the TFX but chickened out. Thor hammer. Hell yeah, it was clean TFX move, by the way. You missed my message earlier. I just wanted you to know it wasn't me sending those comment messages. I forwarded them to imposter. Oh yeah, I think that's what it was. But I guess yeah, that's what it was. Don't do that. Don't repost the message that's to be taken down, because I think that's what happened. Kind of got confused over there. Because it's gonna defeat the purpose. Nah, but we should be good. You should be good. Triggered right before London opens. Idea of the trade. 1 minute console at the top of the 5 minute console. Break of the consolidation. Yeah, nice. Perfect. Reduce risk, straight to profit. Very well done. Boom. 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 Straight to profit, sir. Fly, Goldie, fly. It amazes me how the market knows how to do that typically. Like right at that time for the London Open. It's not the first time that I've seen that happen. Like where it wants to break, even if it's just 1 minute. 1 minute before the London opens. I've seen that happen before. It's quite interesting. I feel like the market is really intelligent. Like it knows all the pressure points. You know, it's insane. It knows all the pressure points of people. And it doesn't matter what strategy that you're going to be using, that it's going to know all the pressure points. Even if you use Fibonacci, divergence, whatever it is that you use, it somehow just gets everybody, and in the simplest fashion as well, which is insane. Super efficient. Sorry, the market is like some kind of weird alien technology, if you ask me, because it's so efficient. It's so efficient, people think it's random. It's not random. Because once you start trading a system like, you know, for a good amount of years, you start to see the patterns, you know, over and over and over and over and over again. Don't you use the 1 hour or 4 hour to see where the major resistance is? Yes. We got major resistance over here for the 4 hour. And we're heading up here to 43.57. It's like 1,000 pips away. That's where we're heading to. Tomorrow is Freaky Friday, so I mean, technically we could get there by tomorrow, provided we get like a pretty strong bullish candles on the daily. We could even see all-time highs by weekend, by the week close. It won't take too much. See, there's nothing stunning in the way of gold right now. And you see what I mean? Like, look at the situations here. Like, also sometimes how... Oh, they actually close above. Oh, I thought it closed right below it. But yeah, this actually closed above resistance here on the daily. Close above resistance. Right at the line, though. And then continue to push up. This thing's heading only up right now. We're up like 0.94%. Fly, Goldie, fly.
Why are you running? Why are you running?
Do you check DXY before taking a trade on gold? No. No, I don't. But it's nice if the DXY is moving down because, you know, we're just intraday trading over here. I think like once you get on the higher time frames, it can become quite tricky because if you're going to use correlations, it only makes sense for using correlations on the higher time frame, right? You wouldn't use a correlation on a 5-minute time frame. Like it doesn't make any sense. You'd mainly use on a higher time frame, weekly, daily. So if it lines up, it's quite nice because we do want to see the dollar lose strength so that gold can move up bullish, because that's technically what it is, right? But you're gonna have days where they're both moving up or they're both moving down. So correlation's a big hit and miss. And you know, like when you're open like that, you got open risk. You're opening yourself to like so many changes, you know, market changes. Now you're waiting for trades to play on the HDF. One moment we're getting rate cuts. Next moment we're not getting rate cuts. One moment Trump is saying that we're going to do tariffs. The next moment we're not going to do tariffs. So it's like you open yourself up to like such a big risk of change. Whereas when you trade like intraday, you're just like in and out of trades. So you're reducing the risk. You know, most people think it's riskier to trade the lower time frames. They see risk is discretionary, right? For me, it's less risky to be in a trade from point A to point B. You know, like 10 pips, 20 pips, 30 pips, whatever. Less risky than looking for 100 pips, 400 pips, trading the higher time frames. Those are big swings. Really big swings. So when you're taking like a big swing like that, you got to have conviction. You know, you got to have Powell come in and say we're getting rate cuts. And then we're going to have direction for, you know, the next week or so. And it'll just keep moving up. So you got to have like real conviction when you trade the higher time frames. And you can't let anything shake your conviction. You know, that's how I always say, watch that movie, The Big Short. The Big Short, he trades the higher time frames. So much conviction and due diligence was taken in his position that even when he was in drawdown, he didn't let anything shake him out of his position, because fundamentally the economy should be leaning more towards one direction, right? Overall. So you got to just survive the turbulence. But if you can't do that and you don't have a big enough account size, for me, I would think like, you know, scalping is basically what you want to learn how to do. You know, how can you catch a move like this? You see, like for me, I have like 16 pip stop losses if I'm looking for a scalp, right? So if you look at this idea over here of TFX concepts, why do I take my positions the way I take my positions? Because they can give me a pretty good return on investment. on my trade. You see, this trade position is already up at 1 to 11 risk to reward. 16 pip stop loss, blah, blah, blah. Entry right over there. For price to continue moving up bullish. You see, that's more appetizing for me. And it's less risky for me as well, because I know, like, if price is supposed to break a key area, then it's supposed to move in a certain direction, right? So that's what we call a confirmation. But if you're taking trades without confirmation, then obviously, you know, you're going to take like really bad trades, because it becomes more random, right? Like when price breaks a high, it's supposed to indicate to you that it wants to move up. If it breaks a low, it's supposed to indicate to you that it wants to move down. But if you're going to be trading like in between, then that's like 50-50. So you got to like couple those with your entry confirmations, whatever there are, accumulations, whatever it is, Fibonacci, trend line breaks, and then just try to be consistent with that. But you're looking at it from a perspective of letting the market guide you, rather than you just taking a trade based off like what you think should happen. Nice to see you in there, Woods. Big check 42-45 area, possible scalp short. Yeah, you see, that's what I mean. Like, just let the market guide you. It's moving up here, so why are you gonna look for a sell at 42.45 if it's moving up? You know what I do at the end of the day? At the end of the day, I'm always gonna review my trade, my trading session. And I'm gonna look at the whole session and say, what trades could I have taken, or how could I have taken that trade, or you know, if I miss a few trades, what could I have done differently next time? And then I'm just going to slowly keep doing that for as long as it takes, and that's what makes you better. At the end of the day, just looking back at your trades and saying, how could I have been part of this move up? Yeah, I was looking for sells at 24.45, but you know, how could I have taken this move? Because there's a pretty big move over here. You know, why was I waiting for price to come all the way up over here when I could have caught something over here? You know, and just be in line with the market. So I think, you know, like if you do that over a period of time, that's how you're going to get better. But if you're going to take a trade and you're going to forget about the trade, you're not going to journal your trade, then it's like, you know, it's kind of depressing like that then. Because you can't get better. Man, like everything you do in life, you have to get a good habit of journaling. You know, it's not just even trading, but it's everything that you do. If you're going to learn a new skill, man, you got to journal. If you're going to learn how to cook, if you want to learn good recipes, if you want to learn good meal preps and you want to do it stress-free, you got to journal that shit. You got to get out a notepad and a pen and write that recipe down. Or you got to, you know, bookmark the links or something like that. Whatever it is, you got to journal it. You know, and then it becomes more stress-free because, you know, you can go back to that data and you can say, okay, you know, today I want this, today I want that. So you can go back at that data, review that data, and then use that data. But if you're not journaling anything, how do you expect to get better? Because, you know, the human mind, I think in a class, let's say if we're going to have like 1 hour stream, out of this whole hour stream, maybe you're going to retain like, oh, what is it that they say? It's a pretty low, like maybe 20% of information in this hourly stream over here. So, you know, if you're just like watching it like Netflix, man, do you even remember episode 3 of Stranger Things season 1? You know, you don't remember any of that shit. You just watch it. You just watch it. Right? You're only going to remember like 20% maybe of all information like an hour. So you got to like write notes. You got to write notes. You got to review those notes. That's how you get better. Unless you got like, you know, photogenic memory. I got to always write things down. Man, when I got always right. When I go to places and let's say I ask for information, I always take my phone out and then I go on my notes app and I say, could you repeat that again? All right, so then I'm going to write it down. I'm going to write it because I don't trust myself to remember things. You know, so that's a kind of cynical approach I have towards my own biases too, is because I don't trust myself, because I know the human mind is not so good at that. The recall for most people is not some good. Some people have amazing recall. They can recall specific dates. Like if you ever watch those British shows about these geniuses who can recall 1985, September 15th, what the weather was, what they were doing that day, what they were wearing that day. Man, insane recall. But majority of us, we're not going to have that recall. So we got to always journal. Got to write down everything. At least for me, at least. What I've also learned in my trading journey is that one of the market's primary weapons is playing with your psychology. People are people are emotional. Emotions will make you mismanage your trade, and the market loves to exploit that. Yes. Super intelligent. The market is very, very intelligent. We like to think that it's random, and we like to think that we're doing something wrong, but the real thing here is that the market is just really intelligent. You know, so you're competing against something that is really intelligent, you know, and I think when you try and overcomplicate it, you're not going to win that fight. You got to find a simple way to win that fight. You know, I think the answer is always in the simplicity. You got to find the weakness, the weak spot, and you got to attack the weak spot. Because if you're going to try and attack the whole thing, then, you know, just like in video games, you don't get anywhere. You got this big giant and you're trying to shoot at him, you're just wasting ammo, right? But if you got to aim at his weak spots, then you know, then you're going to be more efficient. So, you know, I think it's really important to always journal your trades at the end of the day so you can see where those weak spots were. Correct? Because right now, this is not a weak spot. You're just shooting at it with a machine gun, but you're not doing any damage. This was a weak spot right here. It's breaking these highs. This was a weak spot. This is when you don't typically want to get involved, because it's just paying this out. It's paying this entry out. There's no entry here. Some people are looking for sells because of something up here, but the truth of the matter is, like, price is moving up right now. Whether you like it or not, it's moving up. Whether you like it, whether I like it, whether Jay likes it, Tall Trader, whether you like it, Kraken, whether you like it or not, market's moving up right now. Do you recommend a small account for scalping? How to grow that capital fast? You could, like, you know, I was talking to Ricardo about like this challenge he was doing and looking at ways to scale that account. What we're thinking is, I think the best way is when your account grows, you're gonna increase the risk, right? You're gonna increase the risk as you're performing well. Like, just imagine, for example, this year on gold. Gold has just been moving up. You know, the amount of trades this year which have just been like really simple and easy to catch because of how much volume there's been on gold. So as your account is growing, you're gonna increase the percentage, right? And as you build consistency, that's when you start withdrawing the profits. And if you find yourself, let's say you get to this mark over here where you're risking like, let's say 5%, and then you come back to this mark here, which is like 4%, you have to reduce your risk so you can protect the capital that you've already made. You know, so as you're going up, you're increasing risk. As you're going down, you're decreasing risk to protect what you've already made. As you're being consistent, you're making withdrawals at milestones that make sense to you. And I think, you know, that's a pretty good dynamic way of looking at risk. You know, and if you find yourself, for example, let's say you like mismanaging your trades a lot, what you can do is you can break your trade down into three pieces, right? So you can break your lot size into three pieces. You got your first entry, and then you have your second entry when price is in drawdown. So instead of managing when price is in drawdown, you're re-entering when price is in drawdown. So it's just kind of like the same thing, right? So you're entering when price is in drawdown. And for your last position, your last lot on the same lot you broke down, you're going to add back on the risk when price goes in your direction again. So when you start getting confirmations that price is moving in your favor again, then you can re-enter the last position. So, you know, there's so many ways you're going to look at risk. Man, like we had simulation this Monday, and then we took a scaled in position with reduced risk. Because, you know, as price was going in our favor, we could put our stop to break even, re-enter that risk, and still lose the same amount as when we got in our first position, but only maximize our gains. Correct? Yeah, I think like trading is a very visual thing, because if you're gonna try and think about it like in terms of the words that I said, it's gonna be more confusing. But you know, if you're gonna visualize in your head, it's much easier to understand if you know from like a visual reference. Because when I talk about these moves, I'm visualizing it in my head. You gotta visualize. Check trades taken for TFX concept. Oh, nice. You came in a bit late here though. Holy. Imagine if that was your slippage. Imagine you took a buy here, but because of spread, it put you all the way up over here. Crazy. Man, if that's the case, then you gotta find a new broker. $42.37. Nice, nice, nice. Can you explain your last signal, or do you join the VIP for that? Yeah, you gotta join the VIP for that. You know, if you want me to explain something, you gotta send a message into the bootcamp, and then I'll explain it to you. All right, so I saw, like the Germans like to say, I saw. I think with small capital is a long way to live from live from trading. Yes. You know, a small capital is just to get you started, because it's just a business. You know, it's like when you're gonna start a business and you're gonna start with low capital in the beginning, right? And then as the business grows, then you know, then you're gonna make some more profits. But if you don't have the skill, like imagine Gordon Ramsay starting with low capital, right? You know, the controversy around Gordon Ramsay, whether he's a good chef or just really good at making TV shows about food. But anyway, let's just say, you know, he makes sense when he talks about things on Kitchen Nightmares as well. But it's insane. Like all the restaurants that Gordon Ramsay visited on Kitchen Nightmares, I think like 70+% of those restaurants closed down. But yeah, so anyway, let's just say Gordon Ramsay, you know how to, you know, cook food, you know everything about fine dining. He has a higher probability you're gonna start with, like, say $500. He's gonna scale that $500 a lot faster than somebody who just has $500 who doesn't have knowledge. You know, without knowledge, what's gonna happen is you're gonna go the opposite direction. So you want to get to point B, but you're thinking from a point B mentality, so you're going backwards, right? So you gotta always start with a point A mentality. You gotta look at where you currently are at right now and be honest with yourself. Don't be like those delusional restaurant owners on Kitchen Nightmares who say, oh, I got the best pasta in town, you know, and telling you your pasta is shit. Your pasta is shit. You need to change something about this. So your pizza or whatever it is, right? So you got to start at point A. Look at where you are now and look at what you're going to improve to get to point B. The problem is when we all start trading, we don't expect to lose money. We expect to make money, right? So we all is coming from like a point B mentality. And that's why a lot of people lose money and then they start from point A again after they've been humbled. But you know, you want to avoid that humbling process because you're going to save a lot of money there. But if you can't do it, then you know, you just got to learn your lesson, because you know, everything happens in God's timing. So maybe for you, God needed to teach you that lesson, and it all happens in his timing, right? Some people are going to learn that lesson in 5 years. Some people are going to learn that lesson in a few months, you know, but you always got to be willing to learn. If you're not willing to learn, then yeah, it gets a little tricky. It gets a little tricky. So you gotta focus on yourself. Don't focus on other people. Because, you know, it's much more harder to teach other people than it is for you to keep your keep your momentum going, you know? So don't try to convince other people about what you're doing is right. Just do it. Just do it. And you know you're doing it because you're trying to get better. You're not doing it from ignorance. You're doing it from trying to learn, trying to get better. So you're willing to make those failures and mistakes. But at the same time, you're willing to review those failures and mistakes to only get better, correct? Only get better. Always second guess yourself. Am I doing this the right way? Was this the right trade? Should I have done this? Should I have done that? Always second guess yourself because you're never going to know. Man, one thing about life, you're never going to find perfection. You're never going to find that place in life where you're going to be satisfied and feel like super stable, because you're always going to be learning things, because there's always someone out there who's better than you, right? There's always someone better than you. That means there's always something to learn. But you got to manage that. There's an equal measure of stress and success in life. The more you're able to deal with stress, the more successful you're going to be. It's like yin and yang. So you always gotta find ways to break barriers, or what you think are barriers. I'm Italian living in Germany. Mate, Germany is brutal. If you're the smartest person in the room, you're in the wrong room. Yes, sir. Hey, Tal is cooking, man. Tal knows Italiano. What languages do they speak in Germany, Tal? When you go to school? In school, I learned those German, French, like these foreign international languages. We got German, French. I'm not sure if we got Italian. We didn't get Spanish either. We didn't get Spanish or Italian. In America, you get Spanish. Yeah, I think it was mainly like German, French. What do you all learn like foreign languages in your countries? I think in like China, do they probably teach English as a foreign language in China? Probably. Met a Chinese person the other day, and he didn't speak any English, but he spoke the local language. I was profitable in 6 months, but I did dumb things. Yeah, I mean, like, if you're gonna drink and trade, you're not gonna make money, right? Spanish in the US is essential. Yeah. In Morocco, we have French, English, Spanish, Arabic. I always want to learn Spanish and Italian. Espanol. What do y'all learn in Australia? Because I've never heard like Australian foreign languages. Do you learn foreign languages there? I mean, you probably do, but what do you learn? There's a lot of Indians in Australia. I always feel like it's always somehow tied with the history of the country, right? What language you speak. We're kind of funny learning Indian in school though in Australia. I speak German, Italian, and Spanish, and a little bit of English. If you can go back in time, you can pick 1 year or 1 day only. Then you're back to the future. Which day will you pick, and what will you invest all your dollar? Oh, Nvidia probably. They say the next bubble, and it's gonna be the biggest bubble in human history, is gonna be AI. So if you could look at all these AI companies here, they're doing pretty well. I would invest in Nvidia. Let's actually go and look at what Nvidia is doing. Fuck Bitcoin. Bitcoin has no value, you know. It's like, well, what's the real bubble in Bitcoin? Whoa, digital currency, decentralized banking system, blah, blah, blah. But, you know, at the end of the day, man, like the rich people are not going to let Bitcoin work. You think the people who've been here since before Christ, the people who've been designing the world that you live in, are going to one day just say, okay, Bitcoin is going to take over everything? No. The banking system is always going to be in charge. If something like Bitcoin is a threat to them, they're going to use their power to reduce the strength of Bitcoin, which we've already seen happen with GME, right? So Bitcoin is not going anywhere, man. But I think like things like Nvidia and, you know, when things are in line with the way the human civilization is progressing, those things have a higher probability of really gaining in growth, you know, because we are going down that road. It's like the genie that's been out of the bottle now. You're not going to put it back. Yeah, we'll go like Nvidia. Come on, load. Let's see. Oh, Italian and Japanese in high school. Wow. Japanese. I follow one Australian vlogger and she lives in Japan. That's quite interesting. I didn't know y'all learn Japanese in school. Let's see. This was 2023. Damn. Nvidia in 2023 was $19-20. Insane. Man, look at this. In 2019, Nvidia was $5. That's not even that long ago, guys. Man, this is like during COVID right here. This is now January 2020. Nvidia was $6. We just tapped $200. Right now, we just tapped about $212. And you know the problem with Nvidia? They have a really good problem is they don't have enough data centers. Like they have so much demand, but there's not enough infrastructure to facilitate their growth because they're growing so fast. I think it's also it's a good problem to have. Yeah, this is crazy. I would get in here and I would just invest everything, a good portion of my portfolio, like every day, and just look for Nvidia. Nvidia is kind of like a black swan event, you know, because it started here like 23, and then look at this exponential growth over there. It's a black swan event. It's like something that, you know, you can have stability with. Like cryptocurrencies, we've already seen cryptos go to 60K and then back down to 15K, you know, because crypto is based off speculation and it's not much conviction in crypto. But something like this, I think this can only move up. Then if you do your due diligence, you're going to see maybe there are not so many companies out there who can actually rival the likes of Nvidia. And you can keep tabs of it, you know, keep tabs of the CEO, make sure CEO's got a level head, because, you know, like at some point we all loved Elon Musk when the Teslas came out. Remember that? And everybody, even all the liberals, loved Elon Musk because they were like, wow, you know, green energy, Teslas, electric cars. But at some point, Elon Musk fell out of favor. You know, at some point, Elon Musk got a little bit more open. And the more open he was, the more his shares were fluctuating a lot. You know, and the stakeholders, they didn't like that so much. You know, so I think that's a good thing about companies, when you can monitor how the CEOs and how everybody is doing everything. And then it helps you also kind of get a better understanding of the risk. But you know, with Bitcoin, who are you going to monitor? You just got to monitor a forum or a group of people on Reddit, or just like general banter. And maybe like, I think people talk about BlackRock and all of these other things, but it's harder to have like a good macro understanding of the thing, you know, something that's easier to follow. If you got like a CEO, it's much easier to follow. Quarterly earnings, I mean, that's what Warren Buffett does. You know, I mean, with gold, it's also quite easy to follow. It's a safe haven, and it's quite black and white. When one thing happens negative in the world, like gold goes up. So it's easy to follow too. The gold is a really nice investment as well. None of this investment advice. Let me just see where gold was in 2019. Gold in 2019, still quite expensive, but yeah, obviously. But we got gold in 2019 here was at like $1,300 a troy ounce. So like 31 grams, like that big. And now it's at 4,200. You know, like every year for me is always quite interesting because like every year I'm looking for a kind of black swan event. So I think like we've seen that with a Nvidia this year. What else has happened this year? We had Nvidia, we had trends, the meme coins, kind of like black swan events, the trends. The meme coins, sorry. We had, I think last year was it like NFTs? Got NFTs, man. Imagine like everybody's NFTs. Remember when Justin Bieber and all these celebrities were buying millions of dollars of NFTs? And what are they worth today? Nothing. Just finished journaling, copying between accounts in Top Step, trying to pass another combine. I see why people hate journaling. I don't want to trade more just because I will need to journal again. Yeah, it's too much admin here. It takes the joy out of trading, and I think, you know, it makes it boring, and the more boring your trading is, the more like, you know, you're doing it right. So you see, you gotta like journal your trades, you gotta count your trades, you gotta see how your business is doing. Where you gonna manage risk. Kagonese is a mix between English and kangaroo. Apparently, there's more kangaroos in Australia than Australians. You start giving those kangaroos some IDs. IDs soon. Otherwise, you know, they're gonna go on the street. Voter rights. Let me vote. Alright, kick you in your head. There's another accumulation happening here. I don't know. Should we take it, guys? It's really clean. But I'm not, I don't know. I'm not locked in. I was kind of bummed of missing the first one. There's one right over here. Let's see, stop loss between here, 49.4. You see, that's what I mean though. Like, this is the point where London session just ranges, because we've already had the big move. We had the move during the London Open. So what should we do? Should we take it? What do you guys think? We know where we are in the market. Remember, like, this is how you trade, right? Because it's not just about taking the trade, but it's also understanding, like, how did price approach that level as well? You know? How did price approach that level? Was there a move before that move? For example, I think that's always the best way to think about it. Was there a move before the move that you want to take? Especially when you're taking a big risk. Let me just see how we approach this zone. Oh, man. Got 30 seconds for Candlestick to break out here. Let's see what happened. What happened here? Candlestick broke. Boom. That candle has to break the highs. Alright, guys. So I took a buy here. I'm just gonna manage, like, if price pulls down. Oh, damn. All right. That's not what I wanted to see. Oh, shit. Oh, yeah, I knew it. I freaking knew it. I should not have done that. Damn. I was kind of hoping that we could just get the follow through, honestly, because of the volume. But I knew it. I knew this time just fucking consolidates. Shouldn't have taken it. But, you know, at the back of my head, I'm just thinking about this government, how the government's been opened up here. So I was thinking, man, maybe we could just keep pushing up. You see like such a brutal liquidity grab right over here. I knew it. Now I gotta journal that. Now I got to journal this. Let's see, negative 0.56. But it happened so fast. I'm sure on YouTube you didn't even manage to get in because there's a 10-second delay. Oh well. Would have been nice. Would have been nice to get the follow through. You didn't let the trade play out, I think. No, it shouldn't. It shouldn't do that. When the trade is executed, it should never pull back down like that. That's already a sign that that it's gonna be a losing trade. So then you know you just gotta manage your risk. Because if you look at the other one down here, it didn't pull back down like that. It wasn't even volatile, right? It was more like a gradual, steady break. But you see, after such a big move like this, we always kind of expect price to range. Now it's probably just gonna range until, as we mentioned, pre NY Open, pre New York. This is like, but that's what I meant though. Like when you come onto the stream, you're always gonna look at where the trade was coming from, and what's the probability of that next one playing out. But you know, it's whatever. I'm already up for the day, so I'm still up for the day anyway. So maybe I'm gonna try another trade later. See, Dune, boom, boom. Okay, no, that's fine. As long as when you see your positions, you see it and you execute on it. You know, you don't like think about it too much, because it's the overthinking which actually messes you up in the long run. But you should get to a point in trading where it's like, if you see the trade, you're gonna take the trade. You're gonna feel good about taking, because it's like the trade that you've already journaled, so you know you've seen that play out like hundreds of times. It's all about like how many of these trades, if you took them back to back, right, how many of them are gonna play out? You take out of like, let's say 100 positions, correct? So you do 100 positions of those, how many of those are gonna play out? So the thing is, like, when you're gonna take your trades, you gotta take it without hesitating, right? You see, you execute, simple. If it doesn't work out, just move over to the next trade. But at least you know why that situation, why the trade maybe did not play out the way you thought it was playing out. And not just build experience, right? Build experience, and it helps you kind of avoid more situations that you could find yourself like this. But I'm not gonna lie to you guys, I just wanted to get a trade for the stream right here. So I thought, man, this is a trade right here. Confirmation, we got accumulation, distribution, bullish momentum. But was it needed? Probably not. But it's okay. We move. We just keep moving. Am I wrong in saying I'm waiting for a way bigger drawback before considering a buy, not consolidation? No, I think you're right, because price has already moved up here. It's setting up another move right now. So, you know, basically what you saw happen right over here is currently what it's setting up right now. So it's either going to be like a sell, and that's going to be the liquidity grab. You can see how inverted that is, right? So look at this. On the 5-minute, you got price pulled up already. And you know, this is becoming that wick. You see this wick right here? Is becoming that liquidity spike to potentially give you that drawback, that pullback down over here. Just the same way you see this. You see how inverted that is, like yin and yang? Same way this happened for price to move up. It's the same way that this is happening for price to move down. That's why when I sense danger, man, I'm out of the market. You're never gonna catch me lose more than I should if I can help it. You know what I mean? So you see, this is already a sign that, man, you got to get out here, because look at the buyers who are still in their position right now. You know, and when you're going to save yourself like 0.50% from a trade or whatever amount you're going to save from a trade, you know, that's going to add up. Those add up. So instead of taking full losses, next time you take a trade, you're going to work less to make back the loss and make profit again. You know what I mean? So you always got to look at that and say, okay, so, you know, how's my day been so far? You know, and how can I protect what I've already made, or how can I lose less if I already took a loss this morning and I want to take another trade? So that's just all you're thinking. 3 times past funded, but can't take profits yet. Yeah, so I think now it's like just a bit of exhaustion then by those highs. To cool down. Instead, I broke the lows for the liquidity grab. And that's it. That's all how I look at markets, you know. I think it's quite simple. I think there's nothing too complicated here that I'm saying, and anybody who's been trading with some year of experience can see what I'm talking about. And you can see how those probabilities can play out the way I'm explaining them. Yeah, I'm definitely looking for more for a sell than look for a bigger buy. If I get a buy, man, I want to hold a buy. I don't know if I'm going to get a buy during pre and why. But if I get a buy, I want to try hold a buy and make maybe like 3%. If it's a good setup. Price comes down, and then gives me a buy entry. Because see, right now it's like, I know the session time here, it's now consolidatory kind of like, and it's a little bit more unpredictable when you've already had the London Open, and then just like basically what we mentioned in the beginning of the stream. If you don't catch the London Open move, you can expect to like trade in a bit of choppiness a little bit more. There's a higher likelihood of that happening. Yeah, I gotta give myself a whip today. I got too excited. Look how sharp the market is and how took out the lows and comes back up. Yo, let's see. The 5-minute pulled up again. Create a top wick. I think that's a new 5-minute open right here. It's like a shotgun entry. This is kind of like similar trade to what I took this morning, but the wick was lower, was smaller. So give me like a top wick for price to re-break the lows to continue to push down bearish. That was the idea for this trade this morning. Create a top wick, re-broke the lows. Get a wick fill, little wick fill situation over here with like a little bit of clean range. I think that was like 70 pips, I think, from this wick to that low. Daily time frame was down it wasn't trending. It wasn't trending. It was down maybe like 0.20%. I mean, up 0.20% on the daily. There's no trend yet. Let's see. Took a sell up here. Nice, nice. Got a sell position. Yeah, but let me see. Who's in the Discord here? So NFP will be massive after the shutdown. Yeah, NFP should probably be a pretty big move during the NFP. Because you haven't had NFP in such a long time. And you see now it's pulling back. How many bullish candles are these? 1, 2, 3, 4, 5, 6, 7, 8 bullish candles in a row. Holy. Yeah, I think after this pullback, it's gonna create more opportunities, and looks like it's just a sell here. Let's go on our newspaper and see what this says. Gold's hits more than a 3-week high on US debt concerns. Fed rate cut expectations. Yeah, let's go ahead and see what the Fed rate cut is sitting at right now. On the Fed watch tool, 27 days till the next FOMC. Let's see. Thursday, boom, boom. No, that's the wrong one. Wait, what did I do here? 57.9%? How has it reduced down to 57.9%? This thing should be increasing. Should be like 70%, 80%. How is it 57%? 58? Oh, look at that pullback here. Yeah, you see, that's why you got to manage your risk when you see drawdown. How is this 57.9%? Maybe it's gonna change, because Trump signed in the he signed the lift yesterday, right? The shutdown lift. So maybe with time it's just gonna increase. If that's the word on the street, that we most likely get a 25 basis point cut by the end of the year for December, with the jobs data and everything coming out again, because that's kind of what's been holding price on gold back. You can see off the daily though, there's a lot of room for it to move. You got resistance here, you got another resistance here. Look at this. So much room for price to move up. So I think gold is going to give us its bullish exuberance like how we had before. Or we're currently already in it right now. And we have so much room to move up here. So this is good. This is really good. I knew this week was going to be a good week. I just couldn't trade consistently this week on stream. But when I saw price break above this area here on Monday, man, we just knew. You know, when we talk about how to hold runners during the simulations. So you got to look at the same mentality over here. You have clean range up towards this level, correct? Let's say you take a buy over here. Where is the next level of resistance where price can continue to move up? You know, it's right over here. And you can see price can continue to move up like this. You know, so when I saw this smoking gun over here, you know, price is momentum. And what we talk about price, what it does before it breaks key levels. Accumulates, builds up orders, gets that ammo in so it can break the key resistance point right over here. You see, I think reading candles is like learning a language kind of. Because like price is always going to behave in a certain way at certain points to give you clues of what it's going to do next. And then, you know, these are things you're going to talk about and you're going to see them happen over and over and over and over again. And, you know, once you get to that point of seeing it happen over and over and over and over again, it becomes so less emotional and all about just execution. You know, can you execute your strategy over and over and over and over and over again? You know, like some people, they're going to take a trade like I took right over here and say, oh man, they're going to start beating themselves up. They're going to start, you know, playing the victim. But man, you gotta rub that off. You just got to let it roll over your shoulder and just move over to the next trade. You know, because the human psychology doesn't like losses. The human psychology will always find anything that's like a loss a threat. You know what I mean? So you always gotta feel threatened by things, like especially when it comes to losses. So you gotta already preempt that emotional feeling by almost thinking almost robotic, more stoic, more from just as an execution standpoint, rather than waiting for results every single time. You're just executing, and then just let the results come over time, correct? Because if you get too hang up on your results, like each one, you never see the fuller picture, right? And you get more demotivated. But you just gotta keep executing every day, same thing, getting better, second guessing yourself. Did I do the right thing? And just keep it going as stoic as possible. And I think that would be the best advice that I can give anybody here on the stream. Because you know what happens is, in the first few months when we start to trade, we're very emotional about our trades, correct? When we get winning trades, we're very happy about the winning trades. When we get losing trades, you know, it's not nice to get a losing trade, right? In the first few months of trading. And then what happens down the line to a lot of us? A lot of us start becoming more stoic, right? The more we start learning about emotional intelligence and how to control our emotions, we become more stoic. So that's the whole idea here. Is like, how can you develop this to a point whereby you accept the emotions that you feel, but you don't let it govern your day? Because you are going to feel a certain way, right? You will feel a certain way if you take a losing trade or winning trade. You can't hide that feeling because you're human at the end of the day. That's how God created you. But you have to always have that a kind of a voice in your head that tells you like, yes, I'm feeling that, but you know what the plan is. You know what we have to do. Correct? We all have that voice in our head. We know what we want to do, what we have to do, but we just don't do it. Correct? That voice, you got to listen to that voice. Because the amount of students that I've seen who come to me and tell me their problems, they already know what their problem is. You know, that's a fascinating thing. They already know what they need to change. They just don't change it. Right? They just don't change it. But you already know what the problem is. And you already have a solution for it. But it's a lot more difficult to work towards a solution. You know, like I would say, when I have kids of my own one day, I think the number one thing I'm going to tell them is, if you're ever going to come to me with a problem, you're going to come to me with a solution as well. So if you're going to come to me and say, you know, hey dad, I want some new sneakers, right? I want a new pair of sneakers. I'm going to tell, okay, so that's a problem. The problem now here is you want the sneakers. So what's the solution? Right? And then you already get that integrated into their minds, and they're going to be like, okay, so the solution here is I'm going to do dishes for a week to achieve those sneakers. Then I say, there you go. That's what we want. We want you to think in a problem and solution way. Don't come to things with just problems. Come to things also with a solution. And if you're going to come to me with a problem and without a solution, the solution does not have to be correct, right? The solution is just there to show that you're actually trying to come up with a solution. So you better come to me with a solution that's wrong than come to me with no solution at all. You know, if you come to me with no solution, then you're going to get like a penalty. And we can't revisit that idea for like maybe another week, you know? So you always got to think about that. Like everything in business has always started like, what's the problem? And then what's going to be the solution, correct? That's just a simple model. And then you got to see the scalability of that thing. So if you're going to integrate that in your children's heads already, like in the beginning, man, I think, you know, when they're in school and their buddies are saying like, oh man, I wish they sold like sandwiches in school. Man, your kid's already going to be thinking, okay, so we got a problem here. What's the solution? Can I make sandwiches? Can I make some money from those sandwiches? I can start selling sandwiches in school. You know, maybe the school IT systems are not efficient enough. And then kids say, oh, we got a problem over here. You know, you get them excited about it. Oh, IT system's not efficient. So what's the solution? Because, you know, a lot of people, they rather think of the problem. Like if you look at a lot of people in general, they focus more on the problem and they'll come to you with a problem rather than a solution. Because a lot of people have opinions, correct? And they say opinions are like assholes. Everybody has an opinion. So you got to like differentiate yourself from the crowd. And that's, I think, how you do it. So whenever you're going to take a losing trade and you find that your losses are always bigger than your wins, you got to see how can you reduce your losses. You know, and I think if you start thinking about that from an early age, it's beneficial. But a lot of us don't, and we start learning about those things at a much later age. So by the time you're hitting your 20s, you're actually supposed to be forging your own way forward, correct? You're supposed to be unlearning because someone's done the thinking for you for the past 20 years. Your parents have been doing the thinking for you, right? So when you get to your 20s, man, you really got to start like thinking for yourself. You know, you got to start thinking for yourself. I think it's a valuable skill that trading taught me, especially trading, because trading is kind of like our way to push ourselves, right? To get better. What do you think about ETFs like MSCI World? Not sure. That's a hustler's mindset bringing up. Yep. Trading is wild for young people. It's the best thing. It teaches you discipline. It teaches you patience, reflection. Nowhere in trading do you actually learn a lot more about yourself. I think you're going to learn so much more about yourself in trading than anything else, to be honest. If you're greedy, if you're fearful, if you can execute a plan like consistently with discipline, and you get exposed to it more like on a day-to-day basis. It's kind of different from like a lot of other things, I feel. But you're dealing with money directly. You're dealing with human psychology. And money is obviously one of the most craziest things to master in the world, right? That's why so few of us have so much of it. So that's a skill on its own. But the good thing is, it's also one of those skills which, you know, it's so applicable to literally everything else in your life. When you get past 60 years and start learning trading, wondering if it's more difficult. Probably if you're not open to learning, then it's only more difficult, because I say once you turn getting into your 30s, you're kind of already forging the mentality that you're gonna have for a really long time. That's why I'd say the old saying is you can't teach a old dog new tricks, right? So a lot of people, once they get into their 30s, that's kind of like, it's gonna make up the psychological mindset for a long time. So it can be very hard to explain new things to people, like especially if you've ever been a kid, and obviously we've all been kids, and then try like explain things to adults. There's always like a set in mind way of thinking about things for the most part, right? For example, it could be that you have to traditionally go to school, get a degree, etc., and you can't really change that mindset too much. It can be quite difficult, especially with how fast the world is changing. You have to be able to adapt, right? You got to be able to change with the world. But I think that's always the trickiest part for a lot of people. It's just like accepting that they might be wrong. Because you know what it is, right? Let me explain to you how delicate the human psychology is. Because if somebody gets wait, like, how do I put this? It's easier to scam someone than it is to convince someone they've been scammed. Because once somebody gets scammed, and once somebody is in something for too long, it's harder to convince them. Like if you watch this show, you know, like my brother loves watching this show. It's called Catfish, where a lot of like these old people get catfished. And in the show, the whole idea is like, how can we get these people to understand to stop sending money to random accounts abroad? And most of these people, they never stop sending the money. Even after their show, they're always sending the money. Because it's like very difficult to change somebody's thinking, right? It's much difficult to change somebody's thinking after the fact. So it's easier to scam those people than it is to convince them they've been scammed. So you see, that's why it's like you have to always be willing to learn. Like even if you watch Kitchen Nightmares, in Kitchen Nightmares, a lot of those restaurant owners, it's so difficult for Gordon Ramsay to go in there and tell them, hey, you got to change this thing for your restaurant to work, because those people have been doing it for years and years and years. So when Gordon Ramsay comes, maybe they're going to do it for like a month, and then they're going to fall back to their old habits. Correct? So it's just like in trading as well. If you think about it, if you're going to have like bad habits in trading, and you're going to have bad habits for, let's say, a year, it's going to be so difficult sometimes to have a winning streak, stay a winning streak, because your bad habits, they can slowly come back in. It's much easier for them to slowly come back in if they've already become a habit. So you got to be like very careful about those things. Oh wow, this is the accumulation that breaks out. Amazing. I was watching this one right over here. This is a tiny small one here. Let's see how that broke. Spoke about like what, 35 points, 35 pips right here. I was just watching this thing set up low key. Yeah, so man, you got to be very careful because to actually have consistency in the market, you can't let bad habits in, because the moment you start letting bad habits in, it's going to it's like basically if you put a drop of some kind of a mud, you know, think about it this way. If you got a clean cup of water and you put a drop of like some dirty water inside the clean water, it can be such a small drop compared to the whole clean water, but just because of how it spreads, it's going to make the whole thing change color. Correct? Just a small thing like that can make a clean glass of water become all muddy and stuff. Imagine that. Imagine how powerful that is. That's a bad habit. That's how a bad habit grows. So if you got a small bad habit, if it's like over trading or greed or something like that, it's that little dirty thing you're putting in your clean water that's just going to expand. And you know what's the crazy thing? It's like when it expands into the water, it does it so delicately. You know, it does it so delicately, like the water doesn't even see it coming. And before you know it, it's changed color. You're like, shit, what's going on here? And that's kind of what happens to a lot of us. You know, we find ourselves being so disciplined for a long time, and then when we look back at it, we're gonna look back and say, oh man, what happened? When we take that first revenge trade and then kind of like spiral out of control a little bit. So that's why I say stick to 1 or 2 trades a day. For me, sometimes I'm gonna take the 3rd trade, but for most people, just stick to 1 or 2 trades. If you buy high, wait, let me see what happened. I can't believe this one actually played out. That's crazy. I tell you, Vic, you in London for me is golden rule now. Wait for 1 minute above. Next candle, wait for the bottom wick. Yeah, I see it playing out quite nice. It's a lot safer as well. Damn, that's actually true. I love these stocks and this mentality, but please don't mess this gem. Let's see. If you buy the high, you start to cry. And as you sigh, it starts to fly. Why, oh why does my profits die? Short poem from the lemming's perspective. Nice one, Woods. See, you can download this. Yeah, you gotta be super cynical about things in life, so you don't get into that trap of those catfish people, where it's like it's easier to catfish them than it is to tell them that they've been catfished. So you don't want to catfish yourself, basically, is what I was trying to say. And the only way you're gonna not catfish yourself is obviously by playing the devil's advocate. Hey, maybe I might be wrong. London now is just like this if you be closer. Yeah, this is so nice, man. This is really good. You went for the sell? Oh, you waited for the candle. Same candle here too. See, broke below support. Bada-doon. Break, push down. Very nice. Same thing here. Broke above. Yeah, I mean, that is quite interesting. That is quite interesting. You know, I missed that because I wasn't looking at that, so it's easy for me to miss that. You see, like, now we got Ricardo here as a coach of mine. This is why it's so important to have a coach or a mentor, and you should never stop learning, because there's some things that you just miss right under your nose, but you never see it unless it's pointed out to you. But yeah, I never noticed that. Let me see. Maybe we could definitely consider that for maybe trades I don't feel so comfortable about. I don't know, I just like the idea of I just like the idea of just jumping in. I really just like the idea. I think because I've been trading the system for so long now, it's just like, man, if it breaks, I'm in. Because I can save some points over there. So like 7 points, 8 points. But I think if you're going to be risk averse, that's a really great way to think about it. Wait for a candlestick to close because like that's like an impulsive entry, right? It's an impulsive entry. Most of the time, if you're going to do impulsive entries, you kind of want to do it with like confidence. But if you're going to take trades and you want to be safe about your trades, see like situation like this here too. Boom, boom, boom. Little fake out, little inverted head and shoulders. It's better to wait for the candlestick to first close above that resistance and then re-break the highs to continue to move out bullish. Typically, you'd want to wait for a candlestick to first close. Yo, am I tripping or was that the only accumulation that I took which freaking failed? What the hell is going on here? This one passed. This one passed. Where was this one? Oh yeah, this one gave a drawdown. A little bit of drawdown before moving up. See what time this was. London 2. I'm not even trading. This is like Asia session. Oh, this on the 5 minute. Where was my trade this morning? I'm trying to look for the structure. Oh, here. Damn, I can't see it. Oh wait, I think I saw it there. Oh, that's why. Okay, okay. I think this is the one. Was this the one? It kind of looks like it though. It's kind of hiding from me here. Have you guys ever noticed that weird thing that happens on TradingView? Sometimes at the end of the day when you revisit trades, the candlesticks look slightly differently. It could be like a wick that was formed and then the wick is no longer there. I don't know why I can't see it. I can't see it. Damn, that's humbleness right there. Shout out Extremer. Dubs, the thing you reduce SL, so it's tricky, but nothing better. Test it out. Nice little SMA crossover there too. You got that little nice little SMA crossover here. That a what is that? The A cross of 50. Very nice. Yeah, a lot of that, especially on icy market candles. Man, oh man, oh man. My class is canceled for tomorrow. Well, Oi can watch the NFP go nuts. Yeah, we gotta stream tomorrow. I blew 20,000 in September. I'm back to 8K now. Holy. Hey, Tetra, I agree. I was greedy a few times and blew my account. I have now started to slowly and will only trade on confirmation. Perfect. I moved my stop loss for years and it killed me all the time. Sometimes it's hard to accept a loss. That's true. But accepting the loss is actually your greatest power, is to accept losses. Because wins happen so seldom in life, but when they happen, they're pretty big. You know, but in trading, I think it's really important to always accept a losing trade. Before you get into a trade, you should have already accepted that to be a losing trade. That's a mental model you have before getting into any kind of position, right? You never really go into a position thinking, oh, I'm going to make money. You're thinking, I'm going to lose money. So how am I going to manage my risk if I lose money? Because it's easy to win. It's a lot harder to lose. A lot of people get discouraged. So like Kanye West. Kanye West says it's harder for him. What does it say in that one song? Living is harder than dying, but not trying. Now I gotta find that lyric, chat. Let's see what he says. Yeah, he says, when it feels like living's harder than dying, for me giving up's way harder than trying. Bars. That's from a champion. When it feels like living's harder than dying, for me giving up's way harder than trying. So I guess that's the kind of mental model that you gotta have, right? So a lot of people are gonna find like trying so difficult. I see what Kanye here is saying giving ups for him harder than trying. Because, you know, you gotta embrace the loss. You gotta come and you gotta give it a big bear hug like this and say, you're my buddy. You know, you're my buddy. So we're in this together. Shouldn't shy away from it. Then you're gonna find out that the giving up is gonna be harder than trying at that point. It's like a drug. Let me tell you something. Like, losing is like a drug because you learn a lot more from losses than you do from winning, right? Because from the moment of winning, there's somehow a little bit less to learn, right? So you're always seeking knowledge. You're always hungry and thirsty for knowledge. But when you get good at something, there's always like almost a ceiling to like really pushing. Like for my strategy, for example, I've been trading this system for such a long time that the ceiling, its approach, it's harder for me to really gain like really a lot of knowledge from it, because now it's just about execution. But when you're learning like a new skill, there's so much knowledge that you can achieve, correct? So that's kind of almost addictive. That feeling of, man, we can just keep going. You know what I mean? Because when you get good at something, it's no longer that fun. Think about like a video game, for example. When you start playing a new video game, there's so much to learn in that video game. It's so fun, right? But when you learn the game, it's no longer fun because you're like, okay, you know what to do. If you're playing UFC, for example, and you want to win fights, you know what to do. When you're playing FIFA and you want to win games, you know what to do because you've gotten like so good already, right? It's just becoming robotic. You know what to do. It's no longer as fun as it kind of used to be. You know, I remember like when we used to play this game called Def Jam back in the days, which had like Snoop Dogg, Ice Cube, Fat Joe, Redman. It had like all these rappers in it. It's like a fighting game for rappers. 50 Cent was in there. Bro, like there's this one counter move. If you learn the counter move, the game ceases to be fun because you basically are gonna spam that same thing to win the games, right? So it's no longer fun. So that's why I mean, like, that's the whole thing about learning. It's actually it should always be an enjoyable process. So in trading, what I'm trying to say is you gotta enjoy the journey, right? You gotta enjoy the journey. Stop focusing too much on point B. Focus from point A and just enjoy the journey up towards point B. And that was definitely one of the key turning points. I think it's gonna be for a lot of traders, right? Huge turning point. Oh, this was tricky because it gave 2 RR, but it's also fast. Yeah, nice. Pretty. It's one candle. Yeah, it's really fast. What is this? Sell over here. Where is this? I'm trying to see. Oh, here. This is where it was. Boom. Yeah, it's just spinning now. Like, this is exactly what we're talking about. Like, gold most likely just gonna spin here up until like pre New York time now. It's kind of breaking into this range. This range from here to here is about 147 pips. It's just moving sideways. Oh, is there made small top wick, dump, and move all the way up? Any trades done today? Yeah, I took 2 trades. I took 1 winning trade and 1 losing trade. And I think I'm going to take 1 more trade. Maybe today. You ever play FIFA? I've traded on there so many years. Wish real markets were as easy. Yeah, I used to play FIFA. But, you know, I think FIFA is something that it's... I could probably get really good at playing FIFA, but there's definitely, it's more intricate. It's a very intricate game, you know, but you can definitely learn things like always scoring a free kick or something like that. You can get better at those type of plays, but it's hard in the sense you can't always nail it like you could in other games. Like, there are certain moves that you can nail a lot easier in other games, like if it's a counter move as an attack. But in FIFA, it's so freaking detailed, you know, like, I love FIFA, but I think like people who play FIFA, you know what I mean? Like, they're really good at that game. It's really strategic, and you just understand the players a lot better and all of those things. So it's quite deep. It's like playing NFL or NBA, a lot more strategic game. I kind of like stuff like Call of Duty, you know, mindless repetitive actions, slide, shot, or Battlefield. You know, Battlefield, you get really good. It's like it's a little bit more mindless, but it's not 100% mindless, but it's like it's a lot more mindless than FIFA, right? You ever get beaten in FIFA 3-0? It feels so bad, but in Call of Duty or Battlefield, if you get shot, you know, you're back again, you're back on your feet, and you're back out there. But in FIFA, if you're losing like 2-0 and you're still in the first half, it's just so demoralizing. And then you gotta finish the game. Then you're down like maybe 4-0, and then you gotta finish the game. It's rage bait. Yeah, Battlefield's a good balance. It's rage bait. It's like trading, you know, because like FIFA is so long that you gotta finish the game. If you're losing the game, you feel demoralized and you have to play. But at trading, it's kind of the same thing because the game is long. It's a whole day. We have a whole 24 hours, right? So right now, let's say if this is your first trade and you take a 1-0. Right now, you're down 1-0. What happens if you're down 1-0 and you're still in the charts? You know, you maybe gonna start tilting a bit. You know you're down 1-0 because you keep looking at the scoreboard, right? As you're making your plays. And the more you're on the chart and the more you're looking at, there's a higher chance you're going to be down 2-0. You know, and what happens usually in FIFA when we're down 2-0, guys? 1-0, we can deal with 1-0, right? It's just one goal. We can make that back. What happens when we get to 2-0? We start to feel a certain way. That's when you got to get off your seat like this. That's when you get off your seat like this. In the beginning, it's all fun and games. You're chilling with your buddies. Then he gives you 2-0. Then you get off your seat like this. Right? And then you start locking in a bit more. And that's typically in trading the same mentality. Once you're down 2-0, you're going to want to lock in. You're going to want to lock in. That's when the revenge trade comes in. And then, you know, from that point, I think it gets like very messy. So if you're down like 1-0 for the day, just take a break. Go do something else for a bit and then come back and play again. Do you look MMA fights or UFC? Only if there's a big fight happening. I think I only had like one trade like that somewhere here. Yeah, here it was. This was my FIFA trade. See this one right here? What I'm even noticing on the hour. So I took a sell, and then that sell idea, what happened here was it got faked out. So I thought, you know, where the top of the range, that price would come down, take a sell to the bottom of the range, and then I got faked out. Then so that's when the FIFA comes in now. This was, I think, my second trade of the day. I can't remember. So now the FIFA pose comes in. But you know, in this scenario, I think there was just a higher probability that price would move up if it couldn't push down anymore. It took the buy, and then, you know, it was a pretty good buy. Then the buy played out for me. But you want to avoid as many of these days as possible. I rarely seldom take a losing trade and then quickly take the opposite trade. Yeah, this is that range that we spoke about. You see, this is that. That's why I say if you miss that pre-London move, chat, like there's a higher chance you're gonna get stuck in a range right here. Miss that first move, higher chance to get stuck in this range, because this range is just warming up for pre-New York. Hello, brother. Hello, hello. Can you tell me what volume and capital you enter into your trades with? Yeah, I don't think that's gonna help you, because you're gonna take the same trade as me, but you're gonna take it to whatever capacity you can take it in. So me telling you what my lot size is, and you know, it doesn't change anything. Because if I was to trade a $500 account, I would trade it the same way I would trade a $50,000 account. There's no difference. What is the date for NFP? Tomorrow. It should be tomorrow in the New York session open, which is around 8. Wait, there's nothing here. It's not scheduled yet. Is it because Trump just lifted the ban? Maybe we're going to have it next week. Oh. Yeah, there's nothing here yet. Maybe then I would reckon we could have had it this week already, but because we already have the jobs data, right? If they just released it. But if it doesn't get released this month, then I guess we're looking at the 5th of December. Here, non-farm payroll. With $5,000? Yeah, with $5,000, same thing. Rinse and repeat. Nothing changes. That's why it's like, if you can't do it on a $100 account, 200, 500, 1,000, how do you expect to do it on a 20,000, 15K account? Because, you know, I think like what you should focus on first is to see how many of your trades are going into profit. Even if you're just doing this and taking your trades, like how many of your trades actually go to profit? Because now the only difference, if you can do this, the only difference now that comes in is the capital. So imagine a 15-year-old trying to learn how to trade, but a 15-year-old has no money, but he comes onto this game every day, and on this game he's going to set himself a few rules. He's going to say, okay, you know, I'm going to take 2 trades a day, and I'm just going to journal how many of my trades actually are winning trades, right? Without any kind of money at risk. First, he just wants to know how many of my trades actually become winning trades. Let's say if he's just holding a 1-to-1 all the time, for simplicity's sake. So how many of those trades are hitting a 1-to-1? Now, the only thing that changes is if you give that 15-year-old, you know, $500, $1,000, whatever it is, he still has to do the same thing. Forget about the money, because the money is going to be a byproduct, but he just has to keep doing the same thing he was doing, and that will result in profitable trades. That will result in payouts, etc. But it all starts with just that skill of not needing anything. You already have the skill, right? Because now getting the capital is not going to be a problem. You're going to find ways to always elevate your game. That's why I gave you the example of Gordon Ramsay compared to maybe somebody else. You know, if you give Gordon Ramsay $500 to start a restaurant or whatever, even $5,000, he's going to grow it because he has the skill. He could, heck, you could give Gordon here $500 and you could give this guy $5,000. But my money is on this guy. My money is on this guy because I know this guy's got the skill right here. So eventually he's going to be stacking it up and that one is going to be stacking it down. Correct? So they're going to meet each other halfway, wherever that mark is going to be. This guy is going to be going this way and then Gordon is going to be going this way. You understand like how this works? This guy's going to be going back, but this guy's going to be going forward. But at some point they're going to meet each other. And they're going to say, buddy, you're going the wrong way. We should be going that way. Why are you going this way? You know, then you got to listen to what this guy has to say. If you don't listen to this guy, then you're just going to keep going that way. And then he's going to say, all right, I'll see you up ahead in the future. So means no CPI this month too. I think these other red folders, we're probably gonna get them because they're in our way. We're going into them, right? And the US shutdown has been opened up. So unemployment claims, we should be getting unemployment claims now. We have next week just unemployment claims and flash manufacturing PMI. FOMC meeting minutes is cool. This is quite important as well on Wednesday. That'll be quite interesting to watch now. Yeah, I think that's it. I think that's all. You gotta tell them, all right, I'm gonna meet you up ahead. Like, remember that scene in Ocean's 11 when Brad Pitt and what's that actor's name again? George Clooney go up to the guy's house and he's like, hey, we're gonna rob a bank. This is our plan. We're gonna take Bellagio. We're gonna take this bank. We're gonna take this bank. And then the guy was like, oh, you know how many people in history robbed a bank successfully? Then he starts giving examples of all the people who died trying to rob a casino. Sorry, not a bank, a casino. So he was explaining to them all the problems. Brad Pitt and John Clooney were giving the guy the solution. This is what we're going to do. But the guy only had problems. So after he was done with his problems, you know what they did? They got off the table. They shook his hand. And they said, you're right. And they walked away. Because that's how it is. You gotta have two people in life. You're gonna have people who are always looking for problems, and you're gonna have people who are always looking for solutions. But if you're a solution-oriented person, you're not gonna mix well with the problem people. You're gonna listen to them, but they're not gonna be the ones to get things done with, necessarily. So you can't fight those people. The people who have a problem for every solution. You can't fight those people. You just gotta shake their hand and say, I'll meet you ahead. I wonder if I can actually find the scene over here on YouTube. Yeah, all right. Oh, actually, this is it right here. Recruiting Ruben, but he eventually came on board. Because when they walked away, because Ruben is also a goat, you know, this guy is also a shock. So when they started walking away, because he's a shock as well, right? He's like, oh damn, I'm being a lemming right now. So they were like, all right, man. All right, Ruben, we'll see you later. And then it's like, oh, wait. I'm doing something wrong here. I'm messing up. Let me see what these guys have to say. You know what I mean? So you got to have that mentality. Always play the devil's advocate. If you can't play the devil's advocate, you just end up sitting on the table. And you know they're just going to walk away like that. And you never achieve what you needed to achieve. Remember when I'm saying all this, guys, take it in terms of trading advice, and find ways to relate that to trading too. I know it seems like it's not, I'm not talking about trading, but I am low key talking about trading. Man, there's another setup happening right over here. Break of those highs. Boom, boom, boom. Price to move up bullish. So if this one plays out too, that's going to be wild. It's also nice because it retraced down first. Trend is still bullish right now. It's got the daily bias, still pushing up. Hello, Ashi. Welcome, welcome. Gordon gonna take his monies. If Gordon was a trader, he would be taking like one trade a week. Because like the more your account grows, the more you feel like to trade, right? You end up taking like one trade a week, 2 trades a week, the more money that you actually make in the market. But in the beginning, Gordon was dishing it out. So many dishes, do. Now he just gets like maybe 2 dishes a week. You wait for the break of the range and pull back to entry? No. What is the best way to trade a $500 account profitably? Sticking to 1 trade a day. And then scaling. So as your account is growing, you're going to take the highest probability trades. And when you get to $600, or let's say $700, whatever it might be, you got to increase your risk. You increase your percentage risk. And you keep doing that every milestone you get to. Every milestone, right? And if you ever come back down to $700, you have to reduce your lot size again. That's all that it is. And when you start having like really good streaks, make withdrawals. That's it. That's the best advice that I could give to anybody trying to scale an account. Because you're always considering your downside as well. And you're maximizing the times in the market that there's actually plays playing out. So when things are going good, you increase your risk. You know what people do? They do the opposite. Because when things are going bad, they increase their risk. So a lot of us find ourselves in the situation in the beginning where it's like, we know we're not yet profitable, but we're increasing the risk. Because we feel like that's going to make a difference. You know, it's a really bad habit. You're going to only increase the risk when you're doing well. It's like martingale. Martingale increases risk when it's doing bad. So you're increasing when price is going against you. But that's a complete wrong way to do it, because usually you're either right or wrong about the trade. And most times, if you're right about the trade, let's say for example's sake, yeah, let's say we ended up taking this trade during the London Open. You see how it went in our favor? Now imagine you scaling this. You're scaling this. You're scaling this. You're scaling this. You're scaling this, right? Imagine that. You're adding on to winning trades. Because a lot of the time when you're right about the market, it's going to go in your direction. When you're wrong about the market, look at this. Look at this trade that I took over here. This dumb shit trade that I took this morning over here. This dumb shit trade. I can't blame anybody but myself. I'm not going to blame the stream. Oh, you know, the stream made me pressure and all this. Nope. I can only blame myself. You know, nobody has anything. Nobody puts a gun to your head and tells you to do something. So I took this dumb shit trade over here. And you see, if you started scaling into this, what happens? You're going to scale into losing position. You know, you're going to take more losses if you start scaling into that. It's just a bad habit. Because now imagine the same goes for this, but you took a sell and you're scaling into the sell. Correct? So it's a way you can think about also growing a $500 account. When you're winning, you're increasing the risk. When you're losing, you're reducing the risk. Because that loss can only get bigger. So you got to reduce the risk. That's how you're going to grow a $500 account. And at some point, when your account is big enough, and let's say you said, okay, now you got $5,000. Perfect. $5,000. You're not going to trade it the same way, because what you're doing here is still risky. to increase risk as you're getting profit is still risky, right? It's still risky. So you want to get to a point where you can stop doing that and now focus on maybe, you know, if you still want to increase risk, maybe 5% maximum of the $5,000 account per trade, but you're taking one trade a day. Or you could do 2% per trade and you're looking at taking 1 or 2 trades a day. Because the psychology will also change. If you're taking 5%, it's a big risk to be taking 2 trades a day. So you're going to take 1 trade a day. All right. So it all comes back down to risk and risk appetite. Because everybody looks at this word here a bit differently. But there's a way that you can approach it objectively safely. Yeah. So I think that's it. Maximum 5% per trade. That's going to give you what? 20 losses? 20 losses. Okay. If you look at your stats, when was the last time you're going to take like a 5 losing streak or a 10 losing streak? You know, to have 20 losses back to back to blow the account from the start, right? So you got to look at your own strategy as well. What's my strategy capable of? What do the losing streaks look like? What do the winning streaks look like? Can I get away with 5% risk? If it's normal for my strategy to have a 5 losing streak, can I get away with 5% per trade? If I can lose 5 trades in a row normally, because you know, when you're going to lose 5 trades in a row and you're risking 5%, that's going to be a big hit on your account, right? So what is that going to do to your psychology? That's 25%. You'll be down like 25%. Let's just say for simplicity purposes, not counting that you're already in profit or anything, you'll be down 25%. What is that going to do for your psychology? Can you keep executing 5% for you to eventually come out in the green again? So, you know, these are questions that you got to ask yourself when you're taking big risk positions. You know, for me, it's not a, I can get a 3 losing streak, but it's very rare for me to see like, you know, 4 losing streak, 5 losing streak. Very rare. Very rare. So for me, I know like I can expect like negative 15% for example purposes. You know, negative 15% before I need to start making some wins again. But you see, there are times where I can even have 1 win and then back to the losses like this. But it's kind of all like preemptive warfare. So you kind of like making the moves, like when you play chess, you kind of making all the moves up in your head before they actually happen, right? So that's what trading is. You make all the moves up in your head before they actually happen, so you're ready for them. When your opponent puts that chess piece here, you're like, boom, I know what to do next. I preempted this move. Correct? But if you go into it blind, then you're just gonna be a feather in the wind. This is about to break up. Yeah, especially if it breaks right here. It creates that support and breaks these highs by 42.33. I think it's going to be pretty nice. You also got some nice range here as well. This is how many pips? Like about 41. So that's how you got to look at risk. Is CPI still there today? And remember, that's just one model of risk. That's just literally one model I've given you. There are several models of that. We cover them in our simulation. How to maximize gains with reducing risk. There's several ways you can do it. You don't have to take. That's why I was showing you this trade right over here. What do we do, chat, when we're scalping? How many pips stop loss that I normally use? 16 pips. Because I know 16 pips is enough. Like, technically speaking, it shouldn't retrace 16 pips. It's going to be a profitable trade. Look at this model right here. That's already a 1 to 12. This is not uncommon. If you look at all my results over here, if you go to my TFX signals, you can see all my results over here of how far the trades actually run. It's not uncommon for it to run like that. So I've given you one model. I've just given you a second model. And then there's the other one we usually speak about. And you guys can even see it right here from the simulation. How to scale into positions with the same risk, adding on and reducing risk on the first trade. It's literally right here too. This is what we spoke about on Monday. This was the last trade idea that we took on Monday's simulation. If you rewatch Monday's simulation, rewatch it, look at this trade. The market's not going to be exactly the way that trade was, but it's there. Like, it's literally just the same thing. You can even see that. Yeah, I'm gonna. I'm not even gonna get into it too much. I'm not gonna even get into it too much, guys. Like, it's literally all there. So many models to actually approach the market. That's why they say there's 1,000 ways to skin a goat. So you just gotta figure out which one that you need to use for your specific needs. You know, for me, when I'm passing like funded challenges, I want bomberclad trades. I want tight stop losses and bomberclad trades, like runners. That's how I'd approach it. Previous two you have. There's that one. There's the third one that we spoke about was if you're finding yourself managing too aggressively, if you're cutting losses and drawdown, then instead of like scaling a full position, and you scale partial position, partial here, and then the last one is for when price goes in your direction again. That was a third risk management model that you can use. A lot of people, I can share with you guys so many ways to manage your risk. Some of you trading Fibonacci's and retracements into fair value gaps. If you're finding that you're missing your fair value gaps a lot, scale in before the fair value gap hits. If you're going to scale like 50% here before the FVG hits over here, and then scale in the next 50% when it hits the FVG. Because this can happen a lot to people who wait for we call them like free fallers. They wait for price to free fall into their FEG or golden zone or what have you point of control, right? This is like free fallers. Sometimes with free fallers, the challenge you have is you don't get triggered, right? But if you get triggered 50%, that you're still in that trade, there's some trades you're going to have maybe which just keep running as well. So you're still going to feel good that you're in that position. That 50% can easily become 1%. You know, you just let it run because you're part of the move now. So that's the one that I learned from one of my favorite mentors at the time. Super educational mentor that taught me a lot to how to manage those types of trades. You didn't come live in the last 2 days? Yeah, I didn't come live. I should have come live because those 2 days were amazing. We had really nice trades on Monday and Tuesday. Wednesday, I'm not sure, but Monday and Tuesday, I was on the charts for those. Really nice trades, but I didn't stream, you see. And now the day that I stream, I took a loss. That's why like consistency is so important. It's so important for you to like always show up on time, always like do what you need to do, because the days that you miss usually are the days that it plays out, and you never miss a lucky day if you're always on the chart, right? And the days that you do come, if you're inconsistent, it's a lot harder for you to hit the mark, correct? So consistency is quite important. Could have had a really W week this week. Really nice week it could have been. But you know, like life gets in the way and you're not always going to be 100% consistent. But we move. We keep it moving, right? Never stay stagnant for too long. The worst thing that you can do is put something off. Never treat anything like a side business. The one thing about me, I don't like the word side hustle. You know, because side hustle implies a plan B, plan C, plan D. If I'm in any kind of business, it's all a plan A. Whether it's real estate, whether it's trading, whether it's a company I'm investing in, all those are plan A's. There's no plan B. You know, when it comes to business, you can't treat anything like a side hustle. So when you're going to start trading, you can't treat trading like a side hustle. It can't be a plan B. Everything has to be a plan A, right? Because people are very cavalier when it comes to talking about business. If you listen to the way some people talk about business, they talk about it like without much structure. Like, oh, I'm just going to try this. You know, oh, I think that's a good idea. That would be amazing. But, you know, where's the data? Where's the problem? Where's the solution? And what's the roadmap that we're going to get there? And can this roadmap be, how big is this industry? You know, what's the market cap for what it is you're trying to do. Trying to sell diapers? You're trying to sell a pork, salt and pepper shakers? You know, what's the market cap for that industry? And then that's how you're going to start your journey, right? Everything has to be a plan A, not a plan B, not a what if. Because if it's a what if, then just don't start. You know, if you're going to do trading and you're just what ifing it, just don't start. Like, why start anything that you're going to what if? Just start for like maybe a month, see if it's your thing. If you like the experience of doing it, you have to commit. At some point, you have to commit. It took me, I think, about 6 months to like fully commit. You know, 6 months of just watching YouTube videos, trying things out here and there. Man, if that 6 months was like, I cannot waste any more time, I'm committing to my first course that I ever bought, which is like $300, right? That's how long it took me to commit. But ever since that point, it's just been no breaks. No breaks. Because once you have actual skin in the game, it's different than going through YouTube University. It's a whole different ball game at that point. Don't worry, Vic. I did a robbery for you this week. Let's go. Yeah, it's a whole different ball game. There's nothing like actually having money on the table. Like if you go to a casino, right? It's so much of a different experience at a casino when you're not playing with real money than if you were playing with real money. It's more interesting. You're more like invested into it. You're more willing to learn. That's why I always tell people in trading, get off the demo account as soon as possible. Even if you can trade $50, none of this is investment advice. You're doing TFX concepts, consolidation breakouts, you're looking for low risk, high reward, get off the demo account as soon as possible. Like even if you could put in like $50 and you're risking like $1 a trade, $5 a trade, whatever, it's better to do that. Have some skin in the game than not at all. I traded a demo for 6 months, guys. Like I traded demo. I did not commit for like, it was about like half a year, maybe 5 to 6 months. I was trading a demo account for 5 to 6 months. I was not committed to anything for 5 to 6 months. That really stunted my growth. Hey, Samir, this is not a charity over here. I think, you know, you gotta leave now. I'm gonna put you in timeout. What about tax? Oh, you gotta talk to someone about this. I can't discuss those things here on stream. I've been trading demo for 5 years. Cap. There's no way you've been trading demo for 5 years. Gold soars above 4,200 after Trump ends the longest shutdown in US history. Rate cut bets keep bullion shining. Year of the gold bulls. Gold is up roughly 60% year to date, making it one of the best performing major assets of 2025. See, the metal's resilience has kept it front and center for investors seeking shelter from macro risks, even as stocks hit record highs and crypto market remain volatile. See, President Trump signed legislation late Wednesday officially reopening the federal government with a 43-day lockdown. Bullion was gaining for a 7th straight day. I mean, y'all should have had a really good week this week because gold has just been rallying, correct? How's your week been? Like, I think like this week has been pretty decent. Look at the way, like, since Monday, how price has just been moving up over there. It's a really nice week compared to like what we had last week, because last week was consolidating a lot, remember? Like you had a lot of wicks, a lot of pullbacks. This week is a little bit more straightforward. It's kind of taking us back, right, to what we saw there previously. It should have been a good week here. I'm actually looking at the fundamentals with you all for the first time too. I haven't been able to lock into the charts so much this week, so I've been doing a lot of counter trend moves. Let's see why India's jewelry market is still sparkling despite record gold prices. Consumers are trading up, not walking away. Analysts say the Indian I can never say this word, jewelry buyer is evolving. Instead of reducing overall spending, many consumers, particularly in the mid to premium segment, are choosing fewer but higher value purchases. Yeah, jewels are not really the best. Like when it comes to if you're gonna invest in something, you'd rather invest in gold than jewelry. So hard to say that word. Jewelry. What's a word that you can't say, chat? Write in the chat. What's that word that you can't say properly? Honestly, what words you guys can't say properly? That's always been a word. I've never been able to get this word. I don't know what it is. Like there's a part of my brain which doesn't understand these letters. Jewelry. Oh, okay. Jewelry. Jewelry. But saying it fast is hard. Jewelry. 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 Can't freaking say that thing fast. The festive and wedding calendars together create a perfect demand window. Consumers were willing to absorb higher prices because of the cultural and emotional value of gold purchases. Oh man, look at this. Man, I can't believe this. I cannot believe this. The only accumulation that I took for the whole of London session was a losing one. This is seriously pissing me off. How the hell has all of them worked out except the one that I took? Since the London Open, right over here, boom, right here, worked out. And that's why I took that one, because I see the market's been paying these setups out like so much this week. It's like, okay, you know, you'll probably get away with this one right here. Boom, I take it, loss. And then this next one right over here, boom, there, win. Next one we're speaking about right here, boom, win. How is that possible, chat? Damn. That's crazy. Zero drawdown. Come on now, stop playing with me. Zero drawdown. Come on now, stop playing with me. This was a loss, so you can play with me there. Right here, zero drawdown. Come on now, stop playing with me. TFX concepts. And if you think I'm making it up, that's okay. If you think I'm making it up, you know, all you got to do is join the mentorship and go through the WAP database. If you think I'm making it up, you got to see for yourself. You got to see for yourself why I don't have stress with my trades, because I see them play out so much. You know, the only thing that makes me feel bad about a losing trade, and I'll be very honest with you guys, is taking it on YouTube. When I take a losing trade on YouTube, that's the only thing that makes me feel bad. You know, because I know how other people's mentality is. And you want to be you want to always motivate people, but you know, like some people are just weak, you know, weak-minded people who take losses. And then I always thinking about that person, because I was that person, right? I was thinking about how demoralizing that can be. So I'm always feeling bad for that person, which was me in my first year of trading. So that's the only thing that makes me feel bad. But if I'm going to take a loss, like just casually trading, I don't feel anything. But it's because I want people to always believe in themselves. I want people to understand that it's just a shift of mindset. That's all that is needed. It's not about being right all the time. Like Mark Cuban says, you only got to be right that one time. If you're right that one time, you know, that's what a lot of entrepreneurs, when they go to like Shark Tank or have a business idea, just got to be right that one time. And sometimes that's also a mental shift. Once you make that one mental shift, you just got to be right that one time. All those people that you see who succeed in things, it's always a mental shift, right? They're right about that one time to make that mental shift. So the one time can look different for people. Make that mental shift. That's the one time. That's the aha moment you're waiting for. It's a mental shift. The aha moment is not just one moment necessarily, right? It's a mental shift is the aha moment. You're like, aha, okay. So that's how I'm supposed to look at this game of life and winning and losing. That's your aha moment, because that aha moment, it exists in all realms, not just trading, but everything else. And then you start to understand the universe gets out of your way the more you make that shift and the more you take steps in that right direction. That's it. Do you reckon we could go to the London high before going into a fair value gap? I think that I don't believe in fair value gaps. I just believe where price is going. So if price is moving up and there's a fair value gap here, I'm not gonna say that price should move down, right? Because it's showing to me that it's moving up. So I don't believe in fair value gaps. I just believe in what direction the market goes. Because if you look at this, for example, right? Why didn't the market break these lows after creating that support? Why did it only break these highs? And why did it move up? Because it's showing you the direction. It's showing you like, hey buddy, I'm moving up over here. I'm not moving down. That's why I'm not breaking the lows. You know, sometimes you just gotta like trust the market. Sometimes it breaks the highs and that's just a shock in the water, right? So a situation like this, you know, it happens from time to time, like small little liquidity grabs. So, you know, TradingView can load. You see it like broke the high, but it's, what this is, it shouldn't be taken as something negative. You know, if you love animals, people who love animals, if you're always like with animals on a day-to-day basis and maybe one day it scratches you or it bites you, you're not going to take it personal. You're not going to blame the animal. You know what I mean? You still love animals, but you know that's its nature. Its nature is maybe you got too comfortable or, you know, it just so happened to be the case you got attacked on that event, right? But then you keep it moving. You just keep it moving. You respect the animal and you say, okay, you know what? I know that you scratched me here today, but you didn't mean it because that's just your nature, right? You're an animal. I can do as much to be careful with you, but I know sometimes it can happen. So you just keep it moving. That's what I look at as a liquidity grab. Like, you ever see this guy, the real Tarzan? You see Mike, what's his name? Mike Halston. The real Tarzan. This guy loves animals, right? He loves animals. He always gets attacked by animals, but it never deters him to go back and, you know, give them a big hug like this. Big hug like this. You know, that's how you gotta hug the market. The market is like a crocodile over here. You know, sometimes you're gonna get bit by it, but you know, you gotta hug the market because it's a give and take relationship, right? It's gonna take from you and he's also gonna give you back. So you gotta hug it like this. It's all a mental shift because people who can't do this, they're gonna look at this and be afraid of this, right? But you gotta be able to do that. You gotta be able to do that in sense of trading. And this guy's crazy though. What the hell is this? He just grabs a... What is that? Lizard? Some kind of a lizard over here. Insane. Man, if that thing bites him, it's gonna be like a liquidity grab. If that thing bites this guy. Gonna drink his liquidity. The real Tarzan. Iguana. Yeah, it's like an iguana. That's basically what we're doing. When we catch a trade, he does it in the wild, but we do it in the market. So we're basically catching iguanas right over here. You know, sometimes iguana's gonna bite you. What are you gonna do? Have you seen the guy who goes looking for 20-foot python and he catches a big one, says, "Nah, you ain't it"? Isn't it not the same guy? Yeah, I don't like snakes. I don't like snakes. Did you watch a Nat Geo Wild documentary where they put the guy in like a suit and he got chowed by an anaconda in the Amazon? So they were measuring how strong the anaconda's grip is, and also this guy was getting eaten by an anaconda in a protective suit, which is just my worst nightmare. Like, you could not pay me enough to do that. I don't think even if you offered me, honestly, if you offered me $20 million, I don't think I would do that. If I was dead broke and you offered me $20,000 to get eaten by this thing in that Nat Geo wild suit, I would not take it. That's how much I hate snakes. See how this guy was like, he had his a suit on over here with a helmet and he was getting taken by the anaconda. I would not take this bet. Even if you have on standby flamethrowers and all of that stuff, no way. No freaking way. I was giving to a friend, but so fast I think he was not able to get in. Yeah, this is pretty clean break there. Did you wait for your close above? Oh, this time you couldn't wait for your close above. Yeah, this time it just shot up. That's the thing. That close above, I think, works beautifully. Especially if the candle is about to close. Like you got 10 seconds, 20 seconds, maybe 10 seconds. Maybe 10 seconds. And then you can wait for it to close. But if it's like breaking and there's 30 seconds... Damn, it can be tricky. $30? Yeah, it can be tricky. Bro, is it possible to grab more pips if we use less capital? I've seen you instantly entering and booking 50 to 100 pips in gold. Is it possible to grab more pips if you use less capital? You're gonna grab the amount of pips the market gives you. It doesn't matter if you use more capital or less capital. It's just about like, you see for this trade, let's say if you put like 16 pip stop again. Let's just see from risk reward perspective. It would have already pushed up a 1 to 3 risk reward. Pretty good. Right? There was one right over here. But you see that one is not as clean. That one takes a bit more of like a trained eye to see. But these other ones are like a little bit more cleaner to see, correct? But this requires a bit more of a trained eye. It's like when you go to the dentist. I remember going to the dentist and he was showing me one of my teeth. And he was like, you can see it, but it takes a trained eye to see it. Because I can point it to you, you can see it, but you gotta have a trained eye to see it, correct? So these ones are like a little bit easier to see. You can see a little beautiful distribution right over here. It's already up at 1 to 3. It could keep extended gains too, because right now price on gold is macro driven. And that's why I was like, okay, I'm going to come onto stream. I'm going to take a trade after the London session opens. And I still think it's a good idea that price moves up. Because it's macro driven and we know why price is moving up. Whereas a lot of people are going to be taking counter trades. They're trading against gold. They want to take the FVG sells. But come on, man. Come on, just read the newspaper once in a while, Just open it up like this and read. Read something. Newspapers right here on TradingView. Read something. Can I grow an RR rather than 1 to 3? Can I increase RR? The problem with the increasing RR is you're going to have more winning trades become losing trades, right? So I would actually recommend to you the best way to approach that increasing RR thing is to focus on one trade a day, which is the normal trade you take, where it's 1 to 1, whatever it is. And then the next trade is going to be your RR trade. And then you're going to have that data to see how far that your trade is running, right? Based off your strategy, how much RR can your strategy give you? And what's a good safe medium? Because you don't want to be too greedy at the same time, right? So you're going to look at maybe 1 to 5. Maybe if my trade goes 1 to 10 plus, maybe I'm going to go 1 to 5 or 1 to 4. So it's better to be less greedy than too overly greedy, even when chasing low risk, high reward. This you're going to secure at least a 1 to 4. You can say if I put my TP over here and I'll walk away after I put my stop loss to break even, I won't think about it too much. Because I know it's like that's a safe medium. I'm not being too greedy, but I'm also chasing a high RR. Instead of like putting a 1 to 10 and then you don't know at the back of your head, maybe price is up a 1 to 8 right now. So, that's going to also kind of mess you up a little bit. I think that makes sense. Guys, I only say things which I hope make sense and are objective as possible, and you can hear what I'm saying and you can agree. I'm not making things up. I'm very objective and open to all manner of perspectives, but I try and make things make sense. Let's see, you got entry. What is this guy doing? Is it installing a... This is an air conditioner. I got a buddy who's in the air conditioning business. He makes a lot of money. He does air conditioning for malls and commercial buildings. Oh, Lee! Man, he got saved by being on the opposite side there. Damn. Yeah, this is what happens exactly. This is your 1 to 10. If you see your trade go like maybe a 1 to 5, secure at a 1 to 4. If you see your trade go to a 20 pips, secure at 18 pips. Because, you know, otherwise then this is going to happen to you. You're going to almost get your TP and then that happens. I think the dog came out to see what happened there. He's like, hey, what's going on here? One pip before TP, exactly, 1 pip, and the market knows it, right? If it's happened to you before, and that's why I have when I'm scalping, I always scalp like 16 pips because I know like that's more of a sure, that can be more of like, it can be a good win for me, 16 pips, right? Because I know like my moves. You see a move like this, you can see easily secure like 16 pips from a move like this, correct? You can easily secure 16 pips from a move like this right over here. It's always better to secure something and not be greedy. Secure 16 pips. 16, 20 pips easily. 16, 20 pips. If I have a bit of a wider stop loss, then 20 pips on break even. And then I'm just letting the rest run to like 30 pips and I'll secure something at 30 pips. Because I also know 30 pips is very accomplishable. Here. You see, like for the most part, whenever we get these entry models play out, you see they're going to play out. That's 56 pips. This is 60 pips. This one is just about a 195 pips only. This one was just a nasty runner, but I think the runner here, it came back. Remember what we spoke about on our simulation, guys, on a Monday, that if the market pushes, if Luke gets some buys over here, then the market maker is going to come back and see if there's any more Lukes over there. Remember we spoke about this. So that's what's happening over here. Come back to retest the entry. The entry to continue moving up bullish. Remember what we talked about when Luke pushes it up again? I don't know if he's in the call right now. I think so, but when he pushes it up like this and then he finds his buddies over here, Ricardo comes in, Ryan comes in, and we keep pushing it up, then, you know, the market doesn't need to come back to look for any Lukes because we're all up over here together. We're all moving up together. So that's kind of the way I look at markets. Is a reason why you're going to see a lot of pullback sometimes is because if Woods takes a buy over here, and let's say Woods can move the market, right? The market will recalibrate because it's looking for more Woods up over here. If there's not a lot more Woods up over here, you're going to have retracement. It's going to come back to look for Woods. Then the same Woods can push it back up again. Right? The same Woods can push it back up. He can try again. And if it doesn't come back, if there's nothing, it's going to come back down until it finds enough orders to sustain the move up. That's the most simplified way that I can explain to you this choppy price action that you see in the market. Usually when you see like how price looks like spaghetti, that's, I think, the easiest and simplest way to explain that and why that sometimes happens, as compared to why sometimes the move just happens without retesting. You know, because like each section is like a little bit unique in that sense. See, like in this situation, we had plenty of buyers there once we confirmed. And if you pay attention to our entry models, we always get the same exact thing happen every time we take the same trade. The same exact things happen. Either if it's going to be a winning trade, it happens in a certain way. Whether it's going to be a losing trade, it's going to happen in a certain way. I really want you to pay attention to that. And like when you're going through the WAP database and you're watching those simulations, I really want you to pay attention to that. Because there's a certain way how the trades are playing out that is more predictable, right? Once we get our entry confirmations. But if you don't get your entry confirmations, everything else that happens beyond that point is less predictable because you don't know like how price is supposed to behave. And that's why a lot of people mismanage their trades. When they start learning about risk management, there's a lot of mismanagement that happens because they don't know like exactly how it's supposed to like necessarily play out. That's why remember like on stream, like when we say the sellers are in danger and the market is giving them a warning signal, and then it's like they better pull out here or their stop loss is gonna get hit, then their stop loss gets hit, right? Or like when I take a trade and it goes straight into drawdown, why don't I let it hit my stop loss? Because I know it's going for the stop loss. And how can we know that? You know, how can we know that with such accuracy? How can I say here that I'm expecting to give you guys 0 drawdown entries? How? How can I confidently be here telling you that I'm going to give you, if it's going to be a winning trade, it's going to be 0 drawdown trade. And that's going to be a good trade. And if it's going to be a losing trade, just get out when I get out because that's going to be a losing trade. How can I confidently be here and tell you that? It's because you've seen that happen over and over and over and over and over again. Over and over. You can see all the data over here. All our winning trades have similarities. All our losing trades have similarities. And that's kind of what you're aiming for, correct? Like at the end of the day, we're all trying to make sense from the randomness. That's all that you're aiming for. This is all that you're aiming for. How can you make sense out of all this randomness? Answers and simplicity. Keep it as simple as possible. Because if there's less moving pieces, you're able to understand the engine a bit better. Correct? Naturally aspirated engine is much more easier for you to maintain and understand than a turbocharged engine. So you got to choose what engine you want. Both engines are going to get you point A to point B, but you know, like they each have their own pros and cons. Nice little corrective move over here. Down towards support. Little clean range, a little head and shoulders. Counter trend. It's a counter trend move. But there's these small little things, you know, like how price mirrors each other. These small little things. Even if you don't get an entry confirmation there, you can still look at this and say, wow, you know, we moved from point A to point B so nicely. Because price doesn't like resistance. It likes areas of least amount of resistance. Right? It gives you least amount of resistance. Yeah, 0 drawdown is a good problem. Exactly. That's a problem that you want anyway. Because at least you're learning how the trade should look if it's a winning trade. If it doesn't give you drawdown, it's a much more higher chance that it's going to keep going in your favor. You're going to keep pushing longer than you think. Most of my trades, in general, that I close at 16 pips, run for more than 16 pips. You know, just as long as that, and that's why I like what you do for waiting for the candle to first close, right? Because when you wait for your candle to first close, at least you're already getting the direction. Which is actually a very interesting risk model that I've once thought about too. It's like, what if you just miss the first push, but just get in on the next ones? The only issue there is like, how do we facilitate the drawdown from up here? We'd have to move our risk management from here and bring it up here, anticipating we just get a clean follow through. But it's for a lot of people, sometimes what you gotta notice is if you feel like you're getting caught in a lot of fake outs, just wait 10 seconds, you know, give yourself like 10 seconds, 30 seconds, whatever it is before you get into the trade, just wait a little bit longer. If you're finding yourself like get caught in liquidity grabs. Trading previous low. Can you share a glimpse of your strategy? I would like to know what you trade on. Just tune into the stream and then you're going to know the strategy. This is everything that I'm giving here as a glimpse. You know, I can put the food on the spoon, but you know, I can't feed it to you too. You also got to feed yourself. I put below the wick of the next candle, but like that one's very small wick. Even that wick doesn't get taken out. Like if it moves, right? It doesn't typically even take that wick out. At least this year. I kind of already forgot what the market conditions looked like in 2024. But this year it's been very like a, what do you call it? Intentional. Gold has been very intentional about like the direction it goes. It's just ranging, chat. Like it's still stuck in this range from here. From here to here, that's about 150, 45 pips. It's still stuck in the range. 150 pips. As we said, like if you missed the open, London Open, which is right here, you can see on the kill zones. If you missed the London Open, then you can get some trades later on. That's what we were trying to do, but it's just going to range. It's going to range up towards like pre-New York NY Open. Leave a 1 in the chat if we're on the same page. Leave a 1 in the chat if like what I'm saying and you know, it's making sense, if you guys like understand this. Because some of you have been watching this stream for like a month, 2 months. You probably already see the way I see the market. You see if that makes sense to you. Write a 1. Write a 1. Write a 1. Doesn't make sense, you gotta write a 2. Because I hope I'm not just saying gibberish over here and it's making sense. Two. Oh, look at the small liquidity grab below here. All right. Nice to see the ones. Nice to see the ones. Let's go. Nice to see the ones. Yeah, I truly believe this is the best London session stream, guys. I truly believe. What I'm sharing you here of a value is so powerful. Some of you don't even know it yet. Some of you don't even know it yet. Because, man, let me tell you one thing. When I was watching a lot of people back in the days, it was very hard for me to make sense of the way that they traded. Right? Very hard. So what I'm sharing you here with, guys, it's a roadmap. It's a roadmap where I'm including time. I'm explaining London Open and how London should behave and how it behaves otherwise, and how that pre-New York session timing looks and how that behaves. I'm including you time. I'm giving you structure from where your point A's are leading to your point B's if you want to catch these explosive moves. I'm giving you psychology, right? And I'm making sure everything is as clear as possible. You can see the candlesticks, you can see the vision. Because, man, like back in the day, it was much harder for me to understand because of just the way the charts sometimes even looked. You know, they kind of looked like this, like all spread out, and they're using like really big levels, and you don't even have, like, the beautiful thing about this is we're just focused on the 1 minute time frame, but we're considering also the higher time frame. Because like once you really lock in and understand how the lower time frames operate, you don't always got to look at the higher time frames, because you can sort of anticipate what's to come next, even just from looking from the lower time frames. So you can just glance over the higher time frames. Like we already broke down the 4-hour zones and where the daily is heading, and we already understand that. If you look at the 4-hour, you got amazing range, right? We understand this at the back of our head. Price is moving up here, daily is moving up, beautiful range, macro fundamentals are looking great. So we don't need to do any more analysis right now, because timing is an important part of trading too. If this is a pre-NY time, and you know pre-NY time is prone to consolidating, you got to figure out how can you take a trade within this range. And you're going to have a better understanding of how that trade is going to play out, as opposed to a pre-London trade where the day is just starting. And if we're heading up for 1%, pre-London is most likely going to be like 0.30, 0.40, sometimes 0.20. So you have that growth, right? So pre-London trade, you understand time's a bit different from a London open trade to a pre-New York trade and NY open trade, right? And so it kind of gives you an idea of also what to expect from your positions. And that's why, like, you know, I think this was sometime in, or is it September? There was that time where that pre-NY was just giving out pips, like literally free pips. And we caught into that and I just held my trade longer. Because it was like back to back and also at the same time, happening at the same time. So look at this beautiful trades over here. See that? I was like 2%, 2%. And then I was like, okay, so there's a pattern here. You know, there's a pattern. Interesting. There's a pattern of how these trades are playing out over here. So, you know, 2%, 2.20%. And I said, okay, tomorrow I'm going to do a trade, but I'm going to hold this trade. These two trades over here, they happened at, let me see if y'all can see it. They happened at 7:10. You can see 7:10 a.m., 7:10 a.m. What's the probability I get my entry confirmation at the same exact time when there's volume in the market? And I'm like, okay, on the third day, I was like, I'm going to hold this trade because I see that market's just giving out pips during this time. You see, this was 7:22. It literally only 12 minutes past my previous two trades. Made 6% on that trade. Because the market's always going to leave you like clues. And if you look at this week, man, what's been happening this week? Backtest this week, TFX concepts. Backtest the London session open. Don't take my word for it. I might be lying to you. Go check it out yourself. Don't take my word for it. Go backtest the Monday and Tuesday bangers. And what time did they happen? I want you to go check the entry and write down the time that they happened. And see if it looks the same way. I'm locked out of a prop firm and personal account for good reason. Already happy days. Nice. But this breakout's gonna be nice though, because it's like moving sideways for quite some time. See, trading economists, South Africa gold production rises the most since 2023. Did you all get this notification here too? I actually want to see something. Does anybody have their TradingView news notifications on? Do we just all get the same notification? Can someone please confirm this? I don't have. Oh, yes. Okay, nice. Yeah, I just need to check. Sometimes, I don't know if it could have been regional. Sometimes they look at your region and then they give you like data based off countries next to you, or... That's good. Yeah, perfect. So this is as objective as possible, everything here as well. Yeah, I have them on. Nice. Awesome. Yeah, we try and be always objective. This becomes like a no trade zone. But you could theoretically take a position. It's 150 pips. How do I filter out the back consolidations? I'm having trouble with fake consolidations. Just whip me sometimes. The first thing you gotta see is the time that you're trading. Because if you're trading Asia session, market open, sometimes consolidations are really shit, right? Because there's low volume. So just really pay attention to the time. Or you're trading this time, for example. Let's say you're trading this time. You know, we already know most of the action has already happened. You're doing pre-London, London open. So whenever you're trading like this time, that's why I also mentioned this is not the greatest time, because especially after the London open move already, the price action will just consolidate. right? So that could be one of the reasons. It's just you got to maneuver when you're coming in, because let's say if you're coming in here consistently, that means maybe you might be missing the move. So look at where price has been coming from, usually when you're entering a trade, because you might be coming at a time that you're always missing the move and then getting caught in these fake outs, right? So it would be better for you to understand that and say, okay, you know what, next time maybe I'm just going to wait. I'm not going to take the first one. I'm going to wait for price to pull down first a little bit more, and then maybe wait for like a cleaner sort of entry, but after the pull down. Because I know during the London Open, if London opens and gives a move, there's a high chance we consolidate and pull back first. So I think that's going to be one thing that you can do that's really going to help you. You need a podcast, bro. Learn a lot from hearing your perspectives. Thank you. Yeah, it would be nice. Spotify. I'm writing a book right now. Y'all don't know it yet, but I'm actually writing a book. I got the... If you go onto my channel over here, you see these podcasty type of videos that I'm making under trading psychology and tips. I'm going to refine all this information that I'm saying over here, and I'm going to make an audiobook from this. You see, there's like short clips, 2 minute, 4 minute, 3 minute, 2 minute. You don't lose to the market, you lose to yourself. Why trading feels so hard, why the best traders think less, why most traders never really learn, take full responsibility of every trade, the step-by-step formula to master trading, how to find your trading edge. You can't win with a losing mindset. Trading is 90% discipline. So all of this, I'm going to cut and clean it up, and then I'm going to make an audiobook from all of this. So if you haven't yet watched these videos, I would highly recommend it. Watch those videos. Really good videos in psychology. And then we're going to name it You Can't Win with a Losing Mindset. Trading and Life Advice. I've been in this trade buy, but haven't closed out hoping it breaks. Oh, you're stuck in the gulag. We got a soldier here in the gulag. Yeah, probably have pretty big stops waiting for this thing to break out. That's a good title, not gonna lie. Thanks, Kraken. You know, I was thinking about inventing an app yesterday because I saw a huge problem for a lot of people looking for a, let's say, you know, like when people travel abroad and they're looking for accommodation, like students or even just people with families, just normal people looking to like find a place to rent or something like that. I found like the process of doing that for most people is quite grueling. It's quite a grueling process. I like the way Airbnb did it with you know, finding holiday homes and stuff. Now it would be awesome to have one for like renters, which is on the same scale as Airbnb, like a very clean cut app where all the agencies are gonna come post their listings, and it's like a whole thing, you know, it's a whole gamified thing. And maybe we can borrow the rating system from Uber. You know how Uber can rate the riders and you can rate the drivers, so the agencies can also filter out people who are just wasting time and people who are actually serious. And then, you know, then at that point, we're going to have an app that's called, the slogan is going to be real agents, real properties, right? And it's going to be super easy to find any kind of listing that you want for students, families, etc. Super easy, because, you know, when you're looking for a place to rent, you got to go through a lot of data. You got to through a lot of WhatsApp groups. You know, there's a lot of like baggage that comes with all of that process. But if you just had like one app, it makes it the whole thing seamless for everybody. And you know, you're gonna charge like maybe a monthly fee, or you can charge like, you know how agents take sometimes a commission. Maybe the app could take like a commission, you know, like maybe like not 50%, nothing crazy, maybe like 15% of the first month's rent. You know, like a whole game plan. I was thinking about this last night. I was like, damn. And you know, it's scalable, because think about third world countries. You know, third world countries also struggle a lot with this, you know, so it's scalable. You can scale to Bali, you can scale literally everywhere. I think even first world countries don't really necessarily have those types of apps. They have websites, but the websites are quite old. You know, they're quite old. They're not as easy to use. There are many of them, and you might have a lot of scammers in there too. But yeah, if you just got an app like Airbnb, that's worldwide, super scalable. It's also for renters and buyers, so you can buy properties on there too. Vic, you should look at, but I haven't done my research at all about what's in that space, but I know it's an issue that some countries really face. What is this? Oh, you see, this is like for Portuguese, but now imagine it was like international as well. Let's change this. Or is it international? Find, search in Portugal, buy, rent. Yeah, there's so many. You know, the problem is there's so many of these type of websites, but I see they got an app over here. This is nice, clean. It's pretty cool. Let's see what countries they got. Or is this just in Portugal? You know, it's beautiful because it grows naturally, it grows organically. You know, like something like Airbnb grows organically. So you don't have to be on all these countries to list them, because people in those countries already just list them for you on your app. So like also got a really nice organic growth there. Vibe coding, let us build that in 10 minutes now. Yeah, low-key, definitely I want to invest in something like that in the future. Because, you know, you always got to start business with a problem, right? What's the problem and what's the solution you're trying to give people? But this is nice. In Portugal, they have a free version and paid version for professionals. Yeah, this looks very clean. Yeah, I see, stress-free. Look at this lady over here. She's, you know, she's just chilling. Gotta make it stress-free. Yeah, this is Gulag here, guys. I'm gonna head out. I think I'm gonna head out right here, and I will see y'all tomorrow. Let's get it, boys and girls. Ladies and gentlemen, hope you all have a good day ahead. I will see you tomorrow. Adios.
So my boy